Okay. Good afternoon, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest with, look at all these people showing up. Oh, I missed all these. I missed them all. I missed saying hi to you guys. Who's here? Who's here? Who's here? Who's here? Here we go. Dividend Stock Talk. Wow. Imagine that. John's here. Taco Cat. Whoa. Tea with Marie. Mikey G. Julie C. Tommy. Hey, y'all. DKG. All right. Julie C. How you going? Sup, Austin? Mark Dunn. How you doing? Hakuna is here. All right. I got to figure out what's wrong with that phone. It keeps getting bad connection. All right, we're getting started. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Just to guys let you know, I did happen to get a set of microphones, wireless microphones I can put on my lapel. However, they do not plug into my iPhone. They don't. What the hell good are they? Hey, it's old dog. Edwin Boulevard. Edwin, how are you today? Alrighty. Well, we're getting ready to get started. What's our main focus here? Main focus is a safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. People ask me, why am I doing this? Well, because I'm sick and tired of little guy getting screwed over. Okay? This is information. It's free. I'm not charging anything for this. David, how are you doing? I'm not charging anything for this. It is simple, it's easy, it's predictable, and it's consistent. Okay, knock you out. Mama said, how you doing? Okay, so that being said, Beebly Weekly. Hey, James, thanks for the extra help this morning in the group. Hey, that's what we're here for. We're here to learn how to trade successfully. Now, this is not to replace your income. Okay, if it replaces your income, fine, great, wonderful. This is basically for you, for your retirement, for your investments. So if you're not getting at least a 50% return on your money, which I seriously doubt anybody is, then this is what it is. Okay, now you go to work 40 hours a week just like you normally do. You put your money aside for your retirement because whether you like it or not, it is coming. Retirement is coming whether you like it or not. I'm 60 years old now. I'm getting a safe, predictable, consistent 1% per week. And that's my goal. And I want to share that with as many people as possible because, hey, the stronger economy we have, the more often we're going to be able to get our 1% per week. How are we going to continue to do that? Well, we're going to continue to do that by, going to work, put our 40 hours in, our 40 years of our lives, and then retiring comfortably when we get to that certain point in our lives. This is not really meant to replace your income. Well, if it does, great, good for you. But retirement is coming, whether you like it or not. I'm 60 years old. I'm already retired. I'm enjoying my retirement. Comfortable, easy, breezy, all that kind of nice, neat, fun stuff. But for those of you that's still working, for those of you that are punching a time clock 9 to 5 and just disliking the situation, looking at your 401k, trying to figure out what the hell's going on, and then the taxes continuing to go up, 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 and up. If you're not getting a decent return on your money, how does that retirement going to look? Well, is what it is. All right, that's interesting how the numbers go from 180 down to 52. I guess it's just me. I don't know. But anyway, let's see where we are. Let's get going. Let's get moving. And let's see how you guys can make that predictable 1% per week. Hakuna, how are you doing? All right, that being said, let's just get started. See where we are and see what's going on. Now, first thing we have up on the list is LUV, which is Southwest Airlines. So why not we just take a quick look at it? But first, before we get started, oh my goodness. I must be doing something really to offend people. We're down to 29. That's horrible. Anyway, is what it is. That being said, let's just get started, see what we're doing. Okay, now, we're looking for a safe, predictable, consistent 1% per week. How do we do that? Well, we look at dividend stocks that are consistently increasing their dividends, offer weekly options. That allows me to get a weekly cash flow. Okay, fine. Well, let's keep moving. If you move, well, that's interesting. Thank you over there on YouTube. Southwest Airlines. Let's take a look. Okay, so Southwest Airlines had a nice jump today. See that? Nice jump today. Now, did we expect that to happen? No, it just happened. from what I understand, there's a buyout on the table. Okay, great. If you were bringing it in to this week, great, you would have done fine. All right, but at this moment in time, 29.75, 29.50 is going for 64, well over 1%. The 30s, 40 cents, well over 1% again. However, there's going to be some profit taking tomorrow. That's just my assumption. Once they iron out what's going on with the buyout that got thrown out there today, okay, once they figure that out, yeah, more than likely this gap is going to fill. I mean, the same thing happened to Macy's. Macy's, they got a buyout offer, a buyout threat. Let's call it what it is. The buyout threat a couple of weeks ago. Okay, Macy's said, no, we're not going to do it. So fine. It is what it is. But Southwest Airlines, they just might go for it. So what's going to happen to the stock once that happens? I don't know. It changes the game. Okay, because you can't take into consideration all this information. Okay, when the company was running the way the company was running. Now you get a whole new group in there saying, all right, we're going to do this, this, and this. We're going to change everything. Well, of course, you do that, all these numbers are going to change. So what does that mean to us, to investors? Well, it means a couple of things. One, it's either going to come back down to where it normally is, or the new people coming in are going to make it more profitable. If it's more profitable, guess what? They're going to share more profits, hypothetically, with the shareholders. So if we are shareholders, if we're doing the buying and selling, that means we are going to get more and more money. All right, that being said, let's take a look at the stocks where we stopped off on last night. Because last night, you guys gave me a whole bunch of companies to look at, and we didn't even go through half of them. So let's jump in and go through some of them now. First on the list is Pepsi. Pepsi, the number 2 soda. Holy cow, did you see that? It's going to be a definite no for Pepsi. But I want to keep Pepsi on the radar. Let me show you. Look at this big drop today. Big drop today with Pepsi. Huge. Okay? 4 down days in a row. But today it gapped down on Friday, and it gapped down again today, and she kept on dropping, and it made a new 30-day bottom. All right? Okay, a year ago, Pepsi sitting at 182, topped out at 192.22 back in late July. From there, she bottoms out the year in the first week of October. Okay, steady channeling situation. Jumps up here to 183, then drops down. Big drop right there. I'd like to see what happens with that thing in the upcoming weeks. In the upcoming weeks, I'd like to see what happens there. All right. That being said, hi, I don't understand. Can you please explain why you look at specifically a 30-day chart and only the 30-day chart? Hakuna, I don't look at the 30-day chart only. I look at the 4 different charts. Okay, first thing I want to look at is the 1-year chart. Why? I want to see what the high of the year is. I want to see what the low of the year is. Okay, and then I want to see where was it a year ago and where is it now. Okay, what direction is it heading? Well, it's heading in a downward slope. Not huge, but it's still a downward slope. Now, after the 1-year chart, I want to take a look at the last 90 days. Why the last 90 days? Well, it's the last 3 months. It gives me an idea of what the investors are thinking. That's you and I. What are we thinking? Well, look at the last 90 days, which is the last 3 months. Okay, the last 3 months. She's here at 164. She jumps all the way up to 183, and then she drops really big here. Now, Simone, how are you doing? Now, after I get an idea of what it's been doing for the last 3 months, look, she goes up, pulls back, up, pulls back, up, pulls back, up, pulls back. Okay, now we're right here. Well, where is it going next? Well, the only way to figure out where it's going next is taking a look at the last 30 days. Now, the last 30 days, although it's not guaranteed, but the last 30 days will give me an idea of where it's going for the next 5 days. Now, why is that important? We got a question over here from Hakuna. All right, why is it important for me to look at the last 30 days? Well, because there can only be one 30-day high and only can be one 30-day low. Okay, now we know what the 30-day high is, and this is the 30-day low right here. So what's happening next? Well, either this is the 30-day low, which we'll figure it out tomorrow. Either tomorrow it's going to go down further, or she's going to turn around and start to go up. I mean, that's basically all she can do. She's going to go down or she's going to go up. It's a 50-50 shot. So when we get online tomorrow, when the market opens tomorrow, we're going to find out if this today is the 30-day bottom. And if it is, it gives us an idea of where it's going in the next 4 or 5 days. So if I'm jumping in on Monday and I want to be out by Friday, it's important for me to know what direction it's going in the next 3 to 5 days. Well, how else are you going to figure that out? Well, the next 3 to 5 days is really indicative to the last 30 days. Well, because here's the high, here's the low, went back up, pulled back down. Okay, this is the previous 30-day bottom. Okay, she went up, couldn't do anything, came back down. I'd like to find out what this is. There has to be some news of why Pepsi dropped so big today. There's got to be news somewhere. But Hakuna, that's what I look for. That's why I look at the 30 days. Ford has been trending for the last 3 months, mid-11s to mid-13s, for a 5 to 15% swing. Okay, Pip, I see that. We'll take a look at Ford. Now, I love Ford, really do. But I'm explaining to Hakuna why I look at the 30 days. Because my main interest is the safe, predictable, consistent 1% per week. 1% per week. So if I'm buying it on Monday, which was today, I want to find out where it's going to be on Friday. The only way to figure that out is to look at the last couple of weeks and what is the thinking of the market maker, number one, and the buyers and sellers. Okay, the buyers and sellers saying it ain't worth 184. Okay, great. And now it's down to 165.90. How far is it going to drop until we, the buyers and sellers, say, wait a second, that's too cheap for Pepsi. I'm jumping in and I'm buying it. But can't you say that about all 4 periods? Not necessarily so, that you only have one high and one low. Well, you're correct, but let's go back a little bit. Okay? Now, he's correct. There is only one high of the year, and there is only one low of the year. Okay? So the high of the year, okay, people started taking profits. Great. It kept going down, 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 until we decided, we the buyers and sellers decided, hey, it's too cheap at 155. So we started buying it. So then she goes up, and then she keeps going up. So now she's at 183. Okay. Now it's too expensive for some strange reason, for whatever reason. Now she's down to here. But does that tell me where she's going to go in the next 3 to 5 days? Not really. What it tells me is there's a possibility that she could keep going down and try to challenge this bottom for the year, which is right here. This accessory may not be supported. Okay, whatever. That's just my charger. It's charging my phone. Good. So it doesn't really tell me what it's going to do the next 3 to 5 days. It doesn't. Because there's too much other data clouding it. And what we were thinking 6 to 9 months ago is not the exact same economy that we're in right at the moment. Hey, is MNKD going to do anything? I have no idea who that is. Sorry, Banish Ram. I have no idea who that is. Okay, I only do dividend stocks that I know of. Okay, you give me a ticker symbol, I either know it or I don't. If I don't know it, means it doesn't have 20 years of increased dividends, and it doesn't have weekly options, and it doesn't fit into the parameters of this trading strategy. This trading strategy was created for my 9-year-old daughter. It had to be simple, safe, predictable, consistent. Okay? That's it. And that's pretty good parameters if you think about it. Simple, safe, predictable, and consistent. 1% per week. That's the goal here. If I've never heard of the company, why would I invest my money into it? Okay, now, you may know what MNKD is, but I've never heard of it. And I've been doing this for a very long time. Did you sell Kohl's options this week? I believe I did. Okay, thanks. You're welcome, Ram. But can't you say that about... Yeah, I can. All right, so let's take a little bit deeper of a look. Because you're right, I can figure out where it's going. More than likely, the way the chart looks, it looks as if it's going to keep coming down. But 9 months ago, okay, total different economy, total different things happening in the world. Okay, okay, is it the same here as it was here? No, for some strange reason, there's a big drop here. Wait a second. Oh, it's there. It's coming. I gotta sneeze, and it's just taunting me. So how does your perfect chart look like? There's no such thing as a perfect chart. If I look at the last 6 months, okay, from January, look what happened in January. Okay, she went down, she went up, she went down, she went up, she went down, she went up, she went down, she went up. Basically channeled, stayed in a certain channel. Why? Well, because the buyers and sellers are saying, you know what? I like Pepsi. Ooh, profit. Let me take some profit. Ooh, cheap. Let me get this thing, jump in again. Ooh, yeah, that's what we do. How long does it take to give you an... All right, Neil, I have no idea what you're talking about there. Okay, so let's continue looking. So that's the last 6 months. What does that tell me? Well, it tells me basically the exact same things that the 1 year chart told me. Okay, up, down, up, down, up, down, up, down. So here's the high right here. Now we're going to have profit taking. All right, so there's profit taking. Okay, rebound, and then it's dropping some more. Now, is it dropping, or is the market maker forcing it down? What is it? DKG, how are you doing? Okay, so it doesn't really tell me what it's going to do for the next 3 to 5 days. In order to get the next 3 to 5 days, I really got to look at the last 30 days. Because you take any time frame and you look at a 30-day period. Okay? Okay? 30-day period. Here's your bottom. What happens after you get to a bottom? Well, we start buying. Okay? And then we get up to there to a certain point where we say, wait a minute, it's not worth that. So then we start selling. And what happens there? Well, she drops. And then she drops to a point where we say, you know, all right, we've taken all my profit. Now I want to start buying again. Nope, back up. What's going to happen? She's going to come back down again. All right, well, she came down a little bit. So from here, she came down a little bit, went up, came down a little bit, went up, came down a little bit. Finding out what's going to do for the next 3 to 5 days, that's my main objective. Because I want that. All right, Hakuna, I'm not telling you to play it because I haven't even looked at the numbers yet. Okay, we're just looking at Pepsi and how it moves and how I would personally stay away from it. Okay, how I would personally stay away from it. Why? Because look, we have 4 days to the downside, and this is a big down drop. You get a big down drop like that, more than likely, there's going to be a bounce to the upside. Okay, so when she gets really low, and it is at the 30-day low. So if you want to, make money in the stock market, you buy low and you sell high. Well, you can't get any lower than the 30-day low. But we don't know if that's the low yet. Okay? See that? We don't know if this is the bottom yet. Because tomorrow I like 2 days to the upside before I can decide, hey, that's the bottom. Because right now, we don't know if that's the bottom. It might be. It might not be. We just don't know. And that's just the way it is. All right. Next on the list. Oh, so we didn't even take a look at the numbers. Let's take a look at the numbers. 166, the 165s are going for there. Yeah, it's not even giving us 1%. So it's a double. It's a double no. The numbers don't work, for one, and then the chart is telling me no. Did you get out of AEO? No, Mike, I didn't. I still actually have AEO. Did I even sell anything off of AEO today? I didn't. Damn. I meant to do it this morning, and I didn't do anything this morning. Well, I made a couple of trades this morning, but I had 4 stocks that I wanted to take a look at whether I wanted to jump out at, and I didn't. I got tied up with other things. Now you guys know that I'm down here in Florida taking care of my mother's estate, and we have to wait until July in order to go to the next step. So I'm basically sitting here for 3 weeks doing absolutely nothing, hanging out with the kids and the grandson. Okay, so I broke my collarbone, so I'm really sitting around doing nothing. Secretariat, yep. AEO, let's open it up, take a look at AEO. It was another down day today for AEO. Okay, so a year ago, we're at 1185, okay? 1185. She goes up, pulls back, up, pulls back, up, pulls back. She hit the high right here back in March, going sideways, and then she drops. And here we are right here. What does that tell me? It doesn't tell me a whole heck of a lot. That's why I have to zoom in and take a look at the 90-day and then take a look at the 30-day to give me a better idea of where it's going. Okay, so the bottom. All right, before we do that, let's check out the numbers first. See if it's worth it. Okay, $20.75 is the purchase price. The 21s go for 23 cents. That is over 1%. That's what we're looking for, over 1%. All right. The 2050s go for 48 cents. Again, over 1%. Hey, mamas, how you doing? How should the chart look like in the 4 time frames of you could wish? Try to explain what an optimal chart looks like. Sorry for repeating myself. You're not really repeating yourself, Hakuna. Okay? Now, there is no real optimal chart. It's just the way it reads. Okay? At the moment in time, we want to find out where the low is, where the high is, where was it, where is it now, and where is it most likely going to go next. Okay, so let's take a look at AEO, because the numbers do work for AEO if we buy it and then we sell somebody the option to buy it from us. Okay, so a year ago the bottom was 1147, the top, which was in the beginning of March of this year, was 2641. Okay, basically the last 90 days she just kind of dropped, went up, kind of channeled sideways for a little bit, and I hate saying sideways because stocks don't go sideways, they go up, they go down. Okay, but came down, rebound, down, and now she just keeps on falling until it finds the new bottom. Now, I just so happen to have AEO, and it does not make me happy to watch it drop. I'm into AEO at 26, and 26 is not even on this chart. I've had it since the beginning of April. Okay, it does happen once in a while. Tells me I'm going to press the calls and then manage my options. Okay. All right, but you know, there's nothing I can really do with AU other than dollar cost average down, and I probably will once it finds the bottom. Because right now she's dropping. Look, here's the high, and she just keeps going down, down, down. Eventually, it will find the bottom. And when it finds the bottom, it will turn around and go back up again. At that point, I will dollar cost average down so I can get rid of it, because I don't see it hitting 26 again for a while. But I'm still writing covered calls against it every week. Okay, now I'm at 26. More than likely, I'm going to sell the 22s. And the 22s, they're horrible. I might sell the 21 and a halves. Okay, so the 21 and a halves are giving out 10 cents a share. Granted, it's not a lot of money, but it is cash flow coming in. I'm only looking to get a 1% per week. Now, on a $100,000 account, that's only $1,000. So each and every position has to move to get to that goal of $1,000 bucks. YUP, All right, so where am I at the moment? I did buy some Macy's. Okay, what did I buy Macy's at? Let's take a quick look at Macy's, because we talked about this yesterday. We talked about the fact that Macy's was offering 2.5% for the week. Okay, so great. Let's take a look at it. All right. Here's where it was a year ago. Here's the bottom of the year. Here's the high of the year, and here's where it is now. Okay, by looking at that, can you have an idea of where it's going next? Well, not really. You got to zoom in, because this information here last year doesn't really help us out any other than the fact that it identifies what the bottom was in the last 52 weeks. But I'm only caring about the last 1 week. I mean, the next week. That's this week. Okay, Chad, how you doing today? I want to know, where is it now and where is it most likely to go by Friday? All right, so let's take a gander. A year ago, 16. Okay, got a really nice support at 1060. Topped out in mid-March at 22.17. Okay, from there, she drops down, turns around, goes back up. Now she's dropping down again. But she hits the bottom here. Now she's starting to go back up. Not huge, but still. STEM that I mentioned yesterday increased 5% today. Well, your residents, that's awesome. STEM I've never heard of. Okay, I've never heard of it. Okay, now you seem to think, now don't get me wrong, I appreciate you mentioning things to me, because sometimes I do miss stuff. But STEM, I'll write it down, we'll take a look at it. But I've never heard of it. Okay, meaning if I've never heard of it, more than likely it doesn't have 20 years of dividends. If it doesn't have 20 years of dividends, when the stock goes down, and it's not an if, it's a when. Take a look at Macy's. High here, she went down, she went back up, and then she went down. She went back up, and then she went down. Stocks, all they do, they go up, they go down. It doesn't, so then why would I want it? Okay, I'm not looking for speculation. I'm not looking for capital appreciation. I'm not looking for a wish and a prayer. Okay, I want safety first, consistency, and predictability. That's all this channel is: safe, predictable, and consistent. Okay, I'm not looking for massive increasing in stocks. I'm not. I'm looking for, let's call it stagnation. I'm looking for things just to go nowhere. That's it. Look, go nowhere and give me a nice premium. Jen, I haven't seen or heard from you in a couple of days. How are you? James will scold you if you mention a stock that hasn't paid a dividend in 20 years. That's funny. But you think about it, Rocco. Okay, now, Rocco, admit it. Okay, it's drilled into our heads. Go to school, get a good job, okay, work hard, live right, find something you believe in, retire at age 65. Now they're trying to push it up to age 70. Oh, hell no. I'm 60. I have enough money so that I can retire. You got two choices. You're either going to time out or you're going to walk out. Okay? Time out means you're too old. Get the hell out. Here's your gold watch. Have a nice day. I'll show you to the door. Take your stuff with you. Or walk out. People only walk out of a job when they have enough cash reserves to live off of. So isn't that the goal? You get to a certain point, you go to school, you go to college, you get a good job, you raise a family, the kids move out, you hang out with your kids and your grandkids, and then you want to live a good quiet life and just enjoy what you have left. Well, how are you going to get there? This strategy here is boring as hell. But guess what? Boring works for me. It's safe, it's predictable, it's consistent, and the 1% per week comes to over 50% per year. I know, I just mentioned it anyway. All right, your residents, you know what? I understand that, you know, and if it was a different type of channel, you know, if we looked for opportunities to make big bucks, great. But that's not what this is. Okay, I'm looking for a different crowd. I'm looking for the crowd that wants safety, predictability, and consistency. Okay, you got to get that green monster under control. You know, the greed. You know, great. You want to buy it for 20 bucks and have it go to 200 the next couple of days. Great. It might work, but how often? Okay, I'm not going to risk my money for that chance because it doesn't happen that often. Ooh, here's a good one. A quote by Mr. Getty, John Paul Getty. Okay, he said, "I would prefer to have the efforts, 1% effort of 100 men, than 100% effort of my own." Why is that? Well, 1% of 100 people. I mean, that's compounding, and they don't have to do a whole heck of a lot. All the stocks I look at, they don't have to do a whole heck of a lot. They just got to go up 1%, and 1% from where? Well, 1% from their bottom. Because I look at the 30-day top, I look at the 30-day bottom. And if I get 2 green days after a 30-day bottom, that's indication for me to jump in. Not only that, I want to make sure that their dividend is coming up. Okay, I look at the calendar first. The calendar first tells me which stocks to look at. Now, I told you yesterday that I'm only going to buy 2 companies this week. Well, I bought Macy's. Now I'm only going to buy 1 more. Or I might dollar cost average down on a couple of the other positions I already have. It all depends on what the cash flow looks like, because I'm looking for that 1%. It all comes down to the numbers. Whatever the numbers tell me is basically what I'm going to do. Now, I don't have a stock that I want to marry, walk down the aisle, say I do, and hold on to for the rest of my life. I don't. You could call me, I'm trying to think of a good, guys, help me out with this one. Okay, now a man that goes from woman to woman to woman is called a womanizer. A woman that's called, goes from man to man to man, I don't even know what that's called other than, I don't want to say those words. But if you, methodological, okay, that's a good one. I was thinking of a more romantic word. The strategy is fine, it just ignores the fact that starting with selling a put would be much better. It would be, Rocco, but it adds an extra step, and then I'm trying to figure out where it's going to be in 10 days rather than where it's going to be in 5 days. Okay? But, you think about it, because you're talking about doing the wheel. Sell the put first, okay, then buy the stock, and then do the covered call. Okay, that's an extra step. This strategy was created for a 9-year-old. It had to be simple, safe, predictable, consistent, all that kind of neat stuff. When you sell a put, you're obligating yourself to doing something. I don't like to be obligated to do anything. Okay? But you're right, putting a put in there might be a good idea. Now I'm going to be working on throwing together a mastermind group eventually, so that once or twice, maybe 3 or 4 times, I think maybe once a quarter, at the beginning of every quarter, or the end of it, because at the end of one quarter, beginning of another quarter, just getting together and just going over, what are the best ways to increase the predictability and consistency of a trading strategy that is, simple, safe, predictable, and easy. Okay? Simple, safe, predictable, and easy. If we can figure out a way to throw the put options in there without making it more complicated, because right now it's as simple as it can be. Buy a good, decent stock, sell somebody the rights to buy it for basically the exact same price you paid for it. It's a covered call. It's one of the safest trading strategies there is. Okay? From there, what do we add to it to make it simple and easy without making it more complicated? Because once you throw the puts in there, then you have to understand the puts, and those aren't the most easiest things in the world to figure out. And it creates an obligation. Where an option, you can take it or leave it, but a put, you got to do something, and that makes me a little uncomfortable. Okay, Hakuna, you're saying, I assume that you have some charts that doesn't meet your criteria. What kind of chart is that? It's not the chart itself, it's what the chart is telling me. I'm going to show you that in 1 second. Let me check out these questions here. James, I assume that you have some charts that doesn't meet your criteria. What chart? Oh, now that's cute. You're over here and you're over here. What is the tax rate on this 1%, 52% per year? Is it counted as regular income? Well, Mr. User, I'm going to address that in 1 second. But back to you, Mr. Kuma, okay? Well, let's go here. Now, you're asking what charts do I not like? All right? I don't like that. Okay? Now let's go to the 30 days. Because I like to stick to 30 days. The 27, 27, 27. Okay. 30 days at a time. I don't like this. Okay? Here's your 30-day bottom. Here's your 30-day top. I don't like buying at tops. I don't. Because it's like asking where it's going next. Here, I don't like this either. Right? Here's your 30-day high. Here's your 30-day bottom. There's no bounce going to the upside. Okay? We don't know if this is the bottom yet, because this thing is just kind of going sideways. And I hate saying sideways, because it doesn't go sideways. It goes up, it goes down. Okay, so let's look at it a little bit more. Okay? I don't like this one. Okay? She comes down, goes up. Here's your 30-day high. Here's your 30-day bottom. Where's it going next? Well, hypothetically speaking, it should be going up, but it's at the bottom now. How do we know the next day? Yeah, right, I like 2 up days in a row. Okay, it looks like this is the bottom, but there's no direct, what do you call it? Oh, there's 1 up day. There's another up day. So there's 2 up days right there. So what happens next? Okay, it kept going up. Okay, great. But I like certain things. I don't like buying at the top. I don't like buying at the bottom. I'm looking to isolate where it's going to be in the next 5 days. If I'm buying it on a Monday, I want to be out by Friday. Okay, now I have 300 stocks to look at in order to do that. And I always go by the calendar first. When are they paying their dividend? Because stocks have a tendency to go up before the dividend date. And as they're going up, if they're at the bottom and they're going up, yeah, I like odds and probabilities in my favor. When you sell an option, you can cancel the contract. You can sometimes. Okay, so if I sell the contract, let's say for $1, and the stock goes up, well, the option is going to go higher. I have to buy it back. If the stock goes down or stays the same, the option price goes down, and then I can call it back. See, when I say it's all about the numbers, okay, first thing, step 1 is the calendar. When are they paying their dividend? Step 2 is, what can I buy it for? What can I sell to someone else for? And am I getting 1%? That's step 2. Those are the numbers. Next, I want to take a look at the chart. Is it the right time to buy, or is it not the right time to buy? If it's the right time to buy, it's great, I'll buy it. Then, on Tuesday, Wednesday, and Thursday, I look and see what the stock is doing. Okay, was I right? Was I wrong? Where can I get that dividend calendar? Chad, everything you see here, first of all, is live on YouTube. So you get to see the little tiny numbers. You can put it on your big screen TV, grab a bottle of popcorn and cold beer or wine, whatever you like. Sit back on your big chair or your couch. Just chill and watch it on your TV. Or open up your computer, bring it up on your computer. Because it's available live on YouTube right now. Eventually, I'm working for having my own live YouTube TV show, which would be, I have to get more employees first, because right now it's just me. Get more employees, now I'll have somebody do the media, that way I can be like a regular TV show. But that's something further down the line, as soon as, more money rolls in that can substantiate hiring more people. It doesn't matter if 1 year, 90 days, 60 days chart looks good. If the 30-day chart looks bad, if the 30-day chart looks perfect, yeah, that's absolutely correct. It's the 30-day chart that is most important. The 1 year chart shows me the high and the low of the year. Great. High and low of the year. Where is the stock now as compared to the high and the low? Okay, wherever it is going to dictate what am I going to do. If it's at the high now, okay, I want nothing to do with it because it's going to turn around, come back down. Now, if it's at the bottom, that's what I want to see. Why? Because when you buy low and sell high, that's when you make the most amount of money. You can't get any lower than the low of the year. You can't. And then it's the low of the 90-day period, and then it's the low of the 60-day period, and then it's the low of the 30-day period. Okay, wherever we are. At this moment in time, here's the low of the 30-day period. Here's the high of the 30-day period. Okay, she goes up, pulls back, goes up again. Well, what do you think is going to happen here? Well, of course it's going to be profit taking, it's going to come down. Chad shared the live. Thanks, Chad. Yep, don't forget to like, subscribe, all that kind of nicety. And don't forget to comment. All right, where are we next? Okay, so that's Macy's. I like Macy's. Macy's has been very nice to me this year. Okay, so basically you can skip the look at the 190, 60 day. Not necessarily so. Okay, flight path. Can you give some details of your process when a stock you own drops so far that the call premiums shrink? Before I do that, we got somebody here asking about taxes. All right, so let me answer your question about taxes. If you feel that you are paying more taxes than you should be paying, you really need to talk to a tax strategist or tax planner, not an accountant, not a bookkeeper, not an investment advisor, a tax strategist, somebody that knows that stupid ass 30,000 page book front to back. And they're out there. There are a lot of people that do nothing but study that book and try to figure out how to legally eliminate your taxes. And tax avoidance is perfectly 100% legal. Tax evasion, that's not legal. Okay? It is your responsibility to know what the rules are in that book. There's a reason why Warren Buffett pays less taxes than his secretary. There's a reason why Donald Trump doesn't pay taxes. Elon Musk doesn't pay taxes. Okay, all these big billionaires, they don't pay taxes, and there's a reason for that. Learn how to use the system in a manner in which you can legally lower your taxes as low as possible. Now, my accounts are in a corporate account, so they're taxed differently. Now, when the corporation has expenses, like annual meetings, maintenance, insurance, there's certain business expenses that are legally write-offable. Weird, stupid name. Legally write-offable. Legal deductions. Okay, so all my profits are offset by all my losses, but yet I live a comfortable life. Okay, and I make over 1% per week. 1% a week is over 50% per year. Now, if I spend more than I make, and I still live a comfortable life, well, it's perfectly legal. Okay, so again, if you're worried about taxes, you need to talk to a tax strategist, not a tax or a tax planner, not a tax preparer, not H&R Block. Those, don't get me wrong, they do the job of what they're paid to do. Okay, but they don't specialize. You don't need a run-of-the-mill everyday person who does taxes and does tax. No, you need a tax strategist or a tax planner to help you pay zero taxes legally. Okay? Thank you so much for your explaining. Appreciate it. Hakuna, you are welcome. Okay, so hopefully that answers your question about taxes. Okay, so most people have their trading account in their own personal name or joint tenants, something like that. Yeah, that's the absolute worst place to have it. That's going to pay the absolute highest taxes. Okay, put it into a trust. Government can't tax a trust. Okay, or put it into an LLC. Okay, get it as far away from the legal system as possible. That's just my personal opinion. Okay, again, talk to a tax strategist or a tax planner. Okay, dig deep, find a good one. All right, so let's go back to some more questions. Okay, Flight Path 88. Can you give some details of the process when a stock you own drops so far that the call premium shrink? Well, I'm going to give you a perfect example. NUE, well, thank you, okay, taxes, blah, blah, blah. All right, Randall Ray, what did you do with Kohl's and AEO? You know what? I got sidetracked this morning because, what did I do this morning? There was something, oh, yes. I was working with the website designer. We're getting the website done. The website I did, okay, that I have currently is over 15 years old. I mean, it's so clunky and it doesn't really flow nicely. So I'm having it redone, and that's what I was doing today. So I didn't get a chance to do, I did my trading this morning, but there's some of them I put on hold. I meant to go in later on and take care of it, but I didn't. So Randall Ray, that's that question up. I'm going to have to face those tomorrow. Well, 45 isn't probably the best example, though, right? Chad, please don't go in politics with me. Seriously, you're not going to like what I have to say about politics. I'm old school. If it ain't broke, don't fix it. And if you try to fix it and you make it worse, yeah, you're a POS. In my humble opinion. Okay? I don't like anything at all to do with the government. I'm a firm believer in COS. You know what that is? Convention of States. Now, if you don't know what Convention of States is, it's written right in the Declaration of Independence. At some point where we feel that the government is tyrannical or whatever, it is our right, it is our obligation to overthrow that government and to take it over. And to do that, I think it's Article 5, Convention of States. That's where the states take over the government and we reform the whole crap all over again. Okay? That's my belief on the tax. I don't like the Republicans. I don't like the Democrats. I don't like I don't like Congress. I don't like anything at all about government. Okay, back in the 1800s, they didn't have income tax. Everybody was doing much better. Okay, the early 20s, early 30s, early 40s, early 50s, we were doing a hell of a lot better. Mark Wellington. Hey, how you doing there, Mr. Mark? All right, so let's get back to where we were. Let's stay off of politics. I appreciate that very much. Be wise, NUE. Didn't we do that from last night? Didn't we write that down? We looked at NUE last night, and you were here last night. But I'll write it down again. We probably won't get it to tonight because I have so many to look at. Mr. Mark, tell you what, give me a buzz after the live event, probably about 11:30, 12, somewhere in that area, and we'll chat about that question you just had for me. All right. So from there, and we probably won't get to it tonight because we have so many on the list to go over. But let's get back to what we're looking at. Pepsi. All right. So we said no to Pepsi. Let me go back to some of these questions. A Roth, Michael. I'm going to disagree with a Roth only because there's a possibility that Roth can be attached through litigation. Okay, so if you get a divorce and your wife wants to take part of your Roth account, yes, she can. Or your husband wants to take part of your Roth, yeah, he probably can. Okay, if you're sued, yeah, they can go after that too. But if you put into a trust, they can't touch it. Okay, LLC, Limited Liability Corporation, it's named Limited Liability Corporation for a reason. If it's set up properly, yeah, then you can avoid all that crap. I mean, don't get me wrong. I live in a world where I'm delusional, where I think, everyone should be responsible for their own actions. If you come to your property, stub your toe, and sue me for my negligence, I think it's your own damn fault you stubbed your toe. But lawyers don't look at it that way. Okay? The United States is the most litigious country that ever existed. So now, I'd say personally, if you're serious about your money, and it's your money, you should be serious about it. You should protect it as best you possibly can, and then put it in a safe, legal manner in order for you to pass it along to your children and your heirs. If you don't have any, fine. Donate it to a good charity. But don't give it to the government. Okay, don't get me started. Please, don't get me started. Okay, so we looked at Pepsi. We looked at Macy's. IBM. Ooh, somebody wanted to look at IBM last night. Okay, Doc. Hey, Doc, how's it going? NEW. I just meant as far as tax avoidance. Well, tax avoidance is perfectly legal, Chad. What's the name of that chart on YouTube? What chart on YouTube? Okay, now I have two screens going on YouTube. One basically looks exactly the same as TikTok, me standing in front of the screen, and the other one is just the screen itself. Okay, the screen here is live on YouTube. Also, TikTok view. What you're seeing is also live on YouTube, me standing in front of the screen. So there's two lives on YouTube. But this one right here, you can pull it up on your TV. You can pull it up on your computer. You can pull it up on your phone. But I seriously doubt you're going to be able to see some of these small numbers. Okay, when I point out a number, 1865, you might not be able to read that on your phone or your tablet. But if you're on a big screen TV and you got a 60, 70-inch screen TV, yeah, you're going to see that number, 1865. The 1865, look at the 19s. The 19s go for 21. Yeah, that's well over 1%. That's what we're looking for. Safe, predictable, consistent 1% per week. Why? Because I'm retired. I live comfortably off of 1%. That being said, when you get to your retirement, you're going to either be pushed out or you're going to walk out. One or the other. But it's happening. Okay? Oh, we could add a third one. Pushed out, wheeled out, or walked out. What do I mean by that? Pushed out means you're too old and they ask you to leave. Wheeled out, a gurney, a body bag. Nobody wants to be wheeled out. Or walk out means you have enough money that you can just retire. All right, so let's keep going. Next on our list is going to be IBM. We all know IBM. Look, a couple more questions here. I meant tax avoidance. Okay, Chad, you got that one. Hey brother, can you explain how to make money, like the best way to identify options? Or like, I don't know. Okay, you're new. Okay, first of all, Timoth, or is that Tim? Welcome to the show, number one. Okay. Secondly, your best bet is to sit back, chill, absorb what's going on, and see if this makes sense to you. Okay, so this is not something where you buy something here, okay, and it goes through the roof and you make a ton of money and you can retire. No, that's not it. That's not what we do at all. This is safe, predictable, and consistent 1% per week. It's very slow. It's very monotonous. It's very boring. We look at the exact same stocks over and over and over again. I'll show you a quick little sample. What do I mean by the same stocks over and over again? Well, what I'm pulling up right now. Now, this is live on YouTube, so you can see everything, and everything should look normal. All right. Now, here is my 2 accounts that I share with you. Now, I have 6 different accounts, and I only share 2 of them. Okay, it's the exact same strategy. Account number 1 is all cash. Account number 2 is margin, which means half cash, half borrowed money, which I suggest you don't do that. So, when I say I usually do the same stocks over and over again, let's take a quick look at this. Okay, we're going to go back to week number 1. Okay, now we just had Macy's up on the board. So, week number 1, Macy's. Week number 2, Macy's. Week number 3, Macy's. Week number 4, Macy's. Week number 5, Macy's. Week number 6, Macy's. Week 7, Macy's. Week 8, Macy's. Week 9, we don't have Macy's, so we sold Macy's. It made our target, and we got out of it. Week 10, we bought Macy's again. Then we got rid of Macy's. All right, nothing. Week 11, nothing. Week 12, week 13, nope. Week 14, we bought Macy's again. Week 15, Macy's. Week 16, Macy's. Week 17, Macy's. 18, Macy's. 19, Macy's. Okay, we got rid of it back in 19, which was a couple of weeks ago. Okay, because Macy's went up high, and we said, nope, it's too high. Okay, and week 20, nope, no Macy's. And we're in week 21 now. Okay, so as you can see, okay, I like Macy's. I also like Ford. Okay, Ford, CVS, General Motors, Macy's. Ford, Lowe's, Clorox, General Motors, Macy's. Macy's, Ford, Capital One Finance, General Motors, Clorox. Okay, Clorox, Capital One Finance, Ford, General Motors, Macy's. These are all my trades for this year. Okay, 1.03, 1.06, 1.9, 2.03, 2.32, 4.63. That was a nice week. Okay, 3.9, so on and so forth. All my trades are right there. You can see everything I do. All right, so my strategy is safe, predictable, consistent, 1% per week. That's what I live off of. Okay, after a week or 2 of losses, what strike are you selling at? Okay, Ryan. All right, so Tim, hopefully that answers your question. Okay, I do the exact same stocks over and over and over again. Why? Here's the reason. I like dividend stocks that have consistently increased their dividends to their shareholders. Once you decide to buy and sell. Now, if you take your money and you give your money to a money manager, a market account, or you invest it into an ETF, or you give it to someone else other than your own responsibility, you are giving up accountability for your money. It means someone else is making the money. I don't like ETFs. Most ETFs always buy the exact same stocks. I took a look at the top 20 ETFs, and then I saw exactly what they were holding. As a matter of fact, let's go right here, because I extracted, here we go. Whoops. And we want to see all of it. All right, here we go. Now, do you see the list over here? I took the top 20 ETFs, and this is what the top 20 owns. Okay? Most of them you know. A lot of them you don't. Some of them I wouldn't touch with a 10-foot pole. Some of them I would. Okay? NYCB. We got that one. We played around with it. It didn't do very good, and I probably never would buy it again. Ford, Key, WBA, T. Okay, all right. So we have Ford, Key Bank, Walgreens, AT&T, Pfizer, Intel, Fifth Third Bank, U.S. Bank, Bank of America, Verizon, NEM, Cisco, Altria, so on and so forth. That's a long ass list. Okay? It goes from $3 all the way up to $500. But those are the ETF holdings, the top 20 ETFs. I went inside the ETFs and I took out all the stocks. Eventually, when I get around to it, I'm going to take out the ones that have monthlies and only keep the ones that have weeklies, because my interest is in a weekly cash flow. Safe, predictable, consistent. My goal is 1% per week. And if 1% is not enough for you, you're definitely in the wrong place. Because I will take 1% over 3 or 4% any day, because I value safety. That's me. I don't want to have to go back to work. Don't get me wrong. I like working, and I still work, but I do it for a different reason. I do it because I enjoy getting out there and do stuff. I don't do it because I have to. So let me answer this question. After a week or two of losses, what strike are you selling at? Well, let's take a look at a couple of them that I already have. So let me get rid of this. And let's open this back up again. All right, so AEO. We're going to open that up. Hold on. AEO. Okay, so here's AEO. Look at the chart. Okay, here's where it was a year ago. Nice movement to the top. Now she's pulled back. Okay, so I bought AEO back in April. What did April look like? Okay, I bought AEO up here. Now I don't remember exactly, but here's the thing. I did record. I record every day that I trade. Okay, I have a podcast. Let me show you real quick. All right. When you come here to my website, you will find halfway down these little gray dots. YouTube, Twitter, Facebook, Instagram, podcast. The podcast, if you click on that, that will take you to my podcast that I do every single trading day. Hey, there's my pretty little face. Dividend Stock Talk. Okay, a daily trading log is the best way I can describe this podcast. I invest in pre-qualified dividend stocks for weekly cash flow. That's what it says. And if you go down, you will find there's over 900 individual posts every morning. I will do my post. I'll do my podcast. Say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Here's the stocks that we're looking at today for a safe, secure, predictable 1% per week. Let's see what we're looking at. Okay, so there they are. There's over 900 of them. So if I wanted to go back and find out exactly why I bought, where are we? Why the hell I bought AEO at in April 1st, as a matter of fact. Yeah, why the hell did I buy that April? Yeah. All right, so that's what I was looking at. What the hell was I thinking? Okay, I definitely have to go take a look at why was I thinking, because look, here's the end of March. It's at the high. Why the hell would I buy AEO at the high? I did. Now I'm holding on to it. Okay, that's why I set up rules. I don't normally buy at the high. So why the hell did I buy that at the 30-day high? I don't know. The only way to find out is to go back and listen to the podcast to find out why did I do that. All right, so anyway, so as I was saying, that's AEO back in April. Look at where we are now. 30-day high is 25.14. Okay, 25.14 is the 30-day high. And look where we are now. We are at the 30-day bottom. And we don't even know if this is the bottom, because tomorrow it could go lower. Wednesday it could go even lower. I like 2 days to the upside to isolate the 30-day bottom. Right now, we have no idea. So I'm going to wait on AEO until it finds a bottom. Then I'll probably dollar cost average down. Okay, now I do only dollar cost average down a few times, and then I just don't do it anymore. because I don't like to go more than 25% of my account into any one position. But I got plenty of room to go with more than 80. All right, so that being said, when that happens, all right, so I'm into it at 26. Look what the options are. Let's go a little bit more. Let's go to 14. Okay, so the 22 and a halves. The 22 and a half are going for 1 cent. I'm into this at 26. 22 and a half ain't going to cut it. Okay, so I'm going to look at the 21s. Why am I going to look at the 21s or the 22s? Ooh, even those are horrible. I will sell one of them in order to get some cash flow coming in, because as the stock's coming down, I really don't care. So I'll probably do the 21s because it gives me a higher income coming in. And as she's going down, and once she finally hits bottom and turns around, then I will decide what am I going to do with that. Okay, because I'm always looking at the best way to best invest my money with what I have to work with. Now, and a lot of people ask me this all the time. Well, why are you doing that? Couldn't you just do this and make more money? Yes, I could. But as you get older, you start to change your view of things. I changed my view of things a few years ago where money's not that important to me anymore. Yes, I realize what it does. It allows me to, live the comfortable life that I live. But I'm not busting my butt going back to work for that big, huge salary where I'm working for someone else. No, that's not me. Okay, I make a nice, comfortable amount. Okay, and I forget where I was going with that. Don't get old. It's no fun. Really. All right, but anyway, I'm going to wait until it goes down. Now, I am going to sell the 21s tomorrow, get a nice fat little premium of 23 cents, which is over 1%. Great. But once it finds its bottom, then I'll reassess that situation. Okay? Because as it's falling, I want to get a nice premium. And the 21, okay, yeah, it's at 20.75. There's a high probability that it could go there. But then again, if she keeps dropping, who knows? But if I sell it at the 21 tomorrow morning, okay, at 23 cents a share, I'm getting over 1%. But as the stock continues to drop, the value of that option will drop. So later on during the week, I can buy it back and sell another option. Okay, it all comes down to the numbers. Now, I don't sit in front of my computer and calculate numbers all day. I just don't do that. I look for a good quality stock. I make sure the timing is right. Now, when I bought it, I'm going to assume the timing was right when I bought it. I don't know until I actually go back and look at it. Trust or LLC, which is better? Okay, user 546686. You're going to have to ask. You're going to have to get together with your own family. Okay, my kids are in their 30s, early 30s, late 20s. Okay, my daughter's 25, who I created this trading strategy for. She's 25. My son's 30. My other son's 35, and I have one grandson. So they got 40, 50 years left to go in their life. So I'm basically done. I just like to sit back and watch them live their lives. It's kind of cool being on the other side because society doesn't expect anything from me anymore. I did my time. I had my company. Okay, I had a company. I had 21 employees. Okay, I made a lot at that time. Now I'm retired. I don't make as much as I used to, but I make enough to live comfortably. Hey, Joe Arnott, you're asking me what the best dividend stock. Well, for me this year, it's Macy's. It changes every year. I missed some of these questions. Holy cow, I missed quite a bit of these questions. Hey, Gramps, your camera isn't focused. Uh-oh, which camera are we talking about? Because I got 5 of them going. Uh-oh, wow, I missed quite a bit of questions. Uh-oh, wow. Did I miss this many questions? Yes, I did. All right, here I am. Now I'm caught up. All right. I meant as far as tax avoidance. Yeah, Chad, you're going to have to talk to a tax strategist. Brother, can you say, okay. Okay, you're new. Tim, like I said, just hang out, ask questions, learn what you got. What type of company did you have? I actually had a manufacturing company where I created artificial coral reefs. Go figure. What a small niche. Okay, I had a house. Had huge house, 6 bedrooms, 3 bathrooms. Each room, every single room in the house had an aquarium in it with artificial coral reef. That was my showroom. I used my whole house as a tax write-off. Okay, so people would fly in, I'd take them to the house, and I'd show them all the different coral reefs and all the different rooms. Okay, so user 5460, your best bet is talk with your family. Talk with your wife, your children, to make sure what is the best for your situation. Okay, Joe, best dividend stock? Well, so far this year it's Macy's. For me. Lex, you want to take a look at Starbucks? We haven't looked at Starbucks in a while. Okay, we probably won't get to it today, but it is on the list if you want to jump in and take a look at it tomorrow. Toosball. Albemarle. Now, just a little note for you guys. Okay, we are officially into week number 21, I believe. 1, 2, 3. Yeah, we're officially into week number 21 of the year. Okay, week number 11 for the quarter. Okay, so there's 52 weeks in the year, 13 weeks in a quarter. We're in week number 21 for the year. 21 weeks, I have done excellent. I have one loss in 21 weeks. That is Albemarle. Not huge, it's a small loss, but it's still Albemarle. So it was mainly for aquariums. Yes, it was mainly for aquariums. Big ones. Okay, once you get to a certain, all right, now, most people say aquarium, they think of small little fish. No. I'm talking about 6, 7, 8 feet long aquariums. Okay, I actually got flown to Jamaica to install a 14-foot long aquarium. That was like one of the best jobs. And then I had a professional basketball player fly me up to Michigan to do one up there. All right, so as I was saying, what happens with a stock when you buy it? Like I'm into AEO at 26. Okay, now it's down at 20. All right, so as the stock drops, I'm slowly selling the 24.5s. I'm selling the 23s. I'm selling the 22s. And now tomorrow I'm going to sell the 21s. I want that cash flow going in, but here's the risk. Okay, and this does happen. If I'm selling the 21s, I'm looking for the new bottom. Once the new bottom is fine, if it turns around and shoots back up, that's where the risk is, because I'm into it. What never changes is the price you paid for it. Now the price I paid for AEO is $25.96, basically 26 bucks. Okay, so if I sell the 21s and it's above 21 by Friday, yeah, I will lose money. But I'm thinking this thing's going to keep going down until it finds the bottom, and then more than likely I will buy back that option, wait for it to bounce up, go up, and then sell options as it's going up. Okay, so I've been doing this long enough so you can see how the stocks move and then what you can predict it to do next. From here, go to the upside next. Normally. Okay, that's why I like 30-day charts. What has it been doing lately? Where's the high? Where's the low? Where is it most likely to go logically? All right, so let's get back to our list, but let me go some of these questions first. SWKS. Lex, I can almost guarantee that's going to be a no. SWKS. Doc, name of the chart on YouTube is Thinkorswim. Okay. Reggie Bo Jackson. Hey James, looking forward to hearing about IBM. That's what we're on at the moment, IBM. Where should I invest 500K? Adil, I honestly can't answer that question because I don't know who you are. I don't know what your goals are. I don't know what you're looking to do. Are you looking to offset your income? Is that your retirement? I have no idea. If you really want my opinion, this is what I tell everyone. Now, there's 140 people here. You really want my opinion. You really want to talk to me. There's 22 other people pretending to be me. Okay, if you're here live on TikTok right now and you hear me speaking, DM me your phone number. I will give you a call and we can have a nice chat. I'm committed for a whole year to do this. Okay, after that, I don't know if I'm going to do it after that. But I've already done the first quarter, almost done with the second quarter. Hey, 2 more quarters really ain't going to be that difficult. But if you want my opinion on what to do with 500,000, I have to know more about you. Okay, I can't just blurt it out. But hypothetically speaking, 500 grand should give you $5,000 a week. It's $20,000 a month, $250,000 a year for 10 to 15 minutes a day. That's less than an hour a week. So if you think an hour a week is worth $250,000, well, hell yeah, it is. Okay? Then DM me your phone number. I'll give you a buzz and we can chat. Go from there. Rocco, JFN just fun. Okay, anyway. Thanks. Okay, Rocco, if it's not enough to invest, keep saying. Yeah. Okay, Ryan. On stock on your own. On a stock you own. Okay, Ryan, I don't know what you mean by that. Residence. Are you aware that your picture is mirrored for us? Can flip it. I have no idea what picture you're talking about. Are you talking about here? Well, that's because of the camera. That's why this is live on YouTube. So you can read this live on YouTube. And yeah, you're right. Okay, all these cameras do invert me to make me look backwards, but only one camera. See, Instagram doesn't allow me to flip the camera. Facebook doesn't allow me to flip the camera. TikTok does allow me to flip the camera. And YouTube doesn't allow me to flip the camera. So if I have 4 cameras going in one direction and one going the opposite direction, yeah, I have ADD in the bad way. That would drive me nuts. Alright? So if you really want to be able to look at the numbers, all you have to do is just listen to me and just look at the charts on your big screen TV or your laptop. If you're trying to figure this out on your phone or your iPad or something, you're going to strain trying to see these little tinies. Because I'm looking at the numbers here. I can't see them. I can't see them on the phone. So when I say I can buy it at $20.75, you're just taking my word for it. Don't take my word for it. Actually look at the big screen TV you have at home. Go into the living room. Sit on a nice comfy couch. You paid good money for that couch. Go sit on it. Get comfortable. Look at this on your big screen TV. See the numbers. See the way the charts are moving. And then ask yourself, does it make sense to me? It's either yes or no. What about a mill? Okay, Adil, like I said, if you want my opinion on that, then you're going to have to DM me your phone number. I'll give you a call. We'll chat about it. Okay, I can't really tell you what to do. And I don't tell people what to do. As a matter of fact, I insist people do the research yourselves. Okay, just because I say AEO is a good company, and if I buy it now and I do this and I do that, I'm going to make this. Yeah, that's just my opinion. That's what I'm going to do. I'm not telling you to do that. I'm just telling you what I am going to do. Jennifer, can you tell me what to tell? Jen, I have no idea what you mean by that. All right, Jerry, you want a good tax book? Your best bet is to call up your IRS agent, give them your tax returns and say, hey, show me how I can not pay taxes. Because it's right there in the book. Anything and everything you can possibly imagine about writing something off is in that big freaking book they have. Jen, can you please reiterate that? Because I'm not 100% what you mean. Can you tell me what to tell? I have no idea. Matt, should I follow if I'm majoring in finance? Oh, Matt, I'm going to be the bearer of bad news. You're majoring in finance. They're not going to tell you anything like this. Okay? They're going to tell you what they want you to know and what they want you to sell to other people. Because the powers that be, they want you to work 40 or 50 years of your life, put X amount of your money aside, and then hand your money to a money manager or an accountant or someone to invest for you and expect you to live off of a 4% draw. That's the way finance works. Okay? Finance, okay, don't get me started on this. I'm a big believer in cash. I am. I'll give you an example. If I take a $50 bill and I give it to the guy down the street for, let's say, groceries or whatever, I get $50 worth of value. He gets a $50 bill. He can now take that $50 bill and he can pay his electric bill. Okay, great. Now the electric company can take that $50 bill, pay their employees $50. Their employees can take that $50 bill and they can pay the pool guy. The pool guy can take that $50 and he can take that $50 to the gardener and pay the gardener $50. But finance, credit cards, debit cards, all that crap. I take a credit card or debit card and I go get $50 worth in a restaurant. I get $50 worth of service. What does the owner of the restaurant get? $49.70. Okay, so he takes that $49.70 and he pays his employees. Employees don't get $49.70. They get $49.30. They take that $49.30 and they go pay the pool guy. Does the pool guy get that? No. The pool guy gets $39.02. Then the pool guy takes that and he deals it to his gardener, and that gardener gets 48. By the time it trickles down 10 to 15 people, that $50 is no longer near $50. I don't like finance whatsoever. I like cash, because cash does not depreciate from one person to the next person to the next person to the next person. But what does depreciate is a debit card or a credit card or that little, electronic funding. Oh, the $50 went from you to him. Okay, great. That guy didn't receive the $50. He received $49.70. Because the credit card companies, the bank, they want their share. They want their cut. The federal government, they want their cut also. That's why they want you to go to that digital dollar crap. No. I say gold, silver, or, currency. All right, anyway, let's stop that. Let's get back to the stocks, okay? But Matt, yeah, if you're interested, Matt, safe, predictable, consistent, 1% a week. This is what you call coloring outside the box, coloring outside the lines. Does it work? Yes, it works. It works very nicely. I make a safe, predictable, consistent 1% per week. I showed you the numbers, Matt, right here. Okay, you slide on down. Okay, week 20, 0.71. That's the worst week I've ever done. 0.71. That was on account number 1. But look at account number 2, 8.57. Huge difference. Well, why? Well, because account number 1 had MPW, Kohl's, Wind, Marathon, and Intel. Account number 2 had AEO, BITO, MPW, Marathon, Kohl's, GPS, which is the Gap, Wind, Paramount, and Lowe's. Okay, but let's go. Week 19, 1.24. Week 18, 2.61. Week 17, 1.19. Week 16, 1.19. Week 15, 1.2. So on and so forth. Each week averages around 1% or more. Okay, so, you're in finance, fine. I can almost guarantee you there's not a single subject in your finance class that will tell you how to make a safe, predictable, consistent, anything over 20%. Okay, and this is 50% or more. Okay, where am I? All right, hammer it back here again. All right, so let's get back to some more of these questions. New low, lower premium. Yep, Rocco, that's the way it goes. Do you like men? Oh, okay, Bush, thank you for that. You're a smart guy. Hope to be like you soon. Matt, takes time. That's awesome. Wow, that's awesome. Do you sink ships for the reefs? No. You know what? I wish I had a picture to show you guys. But, yeah, people pay me an awful lot of money for those artificial coral reefs. I'd actually take real coral, make molds off of the real coral, and use that to make fiberglass reefs that actually looked like real coral. I remember the very first time I brought one of my samples into the pet store. The girl in the pet store said, "Wait, what are you doing? You should keep that in water." It's not real, honey. She said, "Wow, really?" Okay. All right, Albert, you want to take a look at Apple? Apple's not on the list for tonight, but it is now. AAPL. Now, Albert, and yeah, most likely I'm not going to get to Apple today. It's at 10:35. We've got 1 hour left, and I have about 30 stocks to go through. And you guys keep hitting him up with questions. It means less and less stocks that I can actually look at. Okay, Apple, Albert, Apple. Yes, Albert, I got it. Rocco, Snapple. Ooh, wait a second. Snapple is number 3. I don't quite remember the ticker symbol for Snapple. But Snapple Dr. Pepper. Is it DPR? Is it DPR? DPR. No. Alright, anyway, let's keep going. I'll come around to it. Mikey G, we're in week 24. Oh, sorry, Mikey G, you're right, 24. Brian, thoughts on Robinhood stock? I like Robinhood, the trading app. I don't like Robinhood stocks because they don't have 20 years of increased dividends. Now, don't get me wrong. There's certain companies that come out and they go from zero, like an IPO, and they go through the roof. Great, that's speculation. I don't do that at all. And you know, I miss out on a lot, and I'm perfectly okay with that. Okay, because they go up and then they come back down again. If Apple hasn't paid a dividend for 20 years, you're going to become Rocco. That's not true. Okay. Now, usually, Rocco, I like companies that have 20 years of dividend increases, but every once in a while, I will cut a break for something that's on Warren Buffett's list. Apple is on Warren Buffett's list. It's not on my list, but it's on Warren Buffett's list. Okay, and Daniel Rico, yes, I'm aware my screen is backwards. That's why this screen here is live on YouTube. If I change the screen on one, I can't change it on all four, okay, but I can change it on one and it would drive me nuts. All right? My thoughts on Spotify. I like Spotify. That's where I do my podcast. That's how cameras work. Yep, that's exactly how cameras work. What age did you start trading? I think I was in my late 30s. Yep, Mama says, yep, I actually called Mama. He does call. Yep, you drop me your phone number, I will call you. Do you have anyone in your AM group who is using E-Trade to do their covered call trades? As far as I know, there's one person who uses Fidelity. Other than that, everybody else uses Thinkorswim. Because you're going to find the more you do this and the more serious you are with your trading, you're going to need certain things. One thing you're going to need is a calendar. Okay? What stocks are paying their dividends? This is the very first thing I look at. All right? I look at the calendar. Okay? We're in the 10th. Today's the 10th. I want to look at stocks in 2 weeks. What stocks are those? Well, right here. Okay? We have John Deere, DHR, ITW, Illinois Tool Works, KW, I don't know that, Mandalese, and then Nucor. Okay, those are some of them that we looked at this morning. We looked at a bunch more, but those are some of them we looked at this morning. First thing you want to do is the calendar. And then you want to look at the trade grid. Now, the trade grid you can get anywhere. Anyone has this, the trade grid. The last trade, the bid, the ask, the high, the low, the volume. Okay? And then the option chain. Anyone has the option chain too. Okay, but what they don't have is they don't have the trigger trade. They don't have seasonality. They don't have the calendar. That's why I like Thinkorswim. Now, Thinkorswim was created by Tom Sosnas decades ago. He was a trader. Okay, a trader created this trading platform. He built it because that's what he wanted. Okay, he wasn't a brokerage house who collects money on brokerage. No, he was a professional trader. And he said, this is what I want. I'm going to build it myself. And this is what he built. Okay, he sold out to TD Ameritrade. TD Ameritrade sold out to Charles Schwab. So now Charles Schwab owns it. So you can download this for free online. All right. Wade, Mama, he will definitely call you. Yep, I already called Mama. I called Wade too. Al, I think I called Al. Al, did I call you? Do I check out JD? We'll check out JD. Hold on a second. I'm going to put JD on the list. We're probably not going to get to it today, but we'll get to it eventually. How much would you need to average $3,000 a month off of dividends? All right, funny vids. Are you looking for just dividends? Or are you looking for this strategy? Because this strategy is totally different than dividends. Okay, dividends, you just get a portion of the profits. Okay, this trading strategy, you get the premium, and the premium equals about 1%. So in that case, you divide that 3,000. Oh my goodness! Hold on a second. I'm going to need my calculator for this one. 3,000 divided by 4. 3,000 divided by 4. You need about $75,000 bucks. Okay, so about $75,000 bucks would give you about $3,000 a month. Okay, so So 75,000 bucks will give you about 750 a week. 750 a week multiplied by 4 is about 3,000 bucks. Okay. Can we just copy your trades if we join your group? Yes, you can. Now, very first thing I do, okay, the start of every trading session, I start at 9 o'clock in the morning. Very first thing I do is I go through all my trades and I do the podcast. Very first thing. After the podcast, most people basically just trade off of what I said in the podcast. Because I'll look at the podcast and I'll say, all right, I'll give you a quick little example. SRE. All right, SRE's got a dividend coming up 62 cents on the 27th. Okay, 62 cents on the 27th. Well, let's take a quick look at it. SRE. SRE is a monthly, so that's got to be one of those on Warren Buffett's list. I don't do monthly, so I really got to take that one off my list. All right, let's look at STX. That one I do know, in BBY. All right, let's do BBY. All right, sorry. Look at BBY. BBY has a dividend of 94 cents. Here it is right here. 94 cents. All right, first thing I want to take a look at, or I should say second thing I want to take a look at, BBY is what can I pay for it? Okay, what can I buy it for? 87.40. 87 is going for $1.10. So I take 40 cents off that. I'm making more. I'm making about 70 cents. 87.50 is going for 88. That's more than 1%. I'll take a look at that one. That's the one I like. 87.50. Okay, great. It makes the 1%. However, it's going to be a no. Why? Look at this. The last 30 days, she gaps up, keeps on going, hits a high here, and 3 days to the downside. Well, what do you think is going to happen next? Well, it's going to be profit taking. This gap is going to fill eventually. Look at all this activity over here. Okay, and she gaps up. Well, of course, it's going to drop down because people are going to take their profits. It's just that plain and simple. Nice. Did you sell the company or did your son take it over? I sold the company, Hakuna, because I got divorced in 03 and I sold the company in 03 because I had to give her share. Okay, so I took my share and I traveled the world for 10 years. Spent all the money. Seriously, I did. I sold my company in 03 because I got divorced. I spent all that money and I just traveled the world and I had fun. All right, isn't that the idea of it? You make all the money and you have fun with it. All right, let's keep going with some more of these questions. Marv to the moon. I have no idea who Marv is. That's going to be a no. How much is needed to make an average of 3,000? We just did that one. Is it possible? Is it possible to do it? You are married on TikTok. No problem. Okay, your resonance. Just to satisfy you for like 3 or 4 seconds. Are you ready? Okay, there you go. Now, it's right, okay, just for your viewing pleasure. However, it drives me nuts because one camera's going one direction, the other 3 are going a different direction. Yeah, so that's why I don't do it. If I can get all cameras doing the exact same thing, I would. But until then, terribly sorry. John G. Hi, James. Do you think international paper is heading down? Maybe a play for next week. Ooh, John, we'll take a look at that one more than likely tomorrow because it's 10:45. We got 45 minutes left to go. Yeah, 45 minutes left to go. International paper. Just to let you know, John, international paper is on my list. Okay? There's some stocks you guys will suggest, and I'll say no. Never heard of it. But international paper, I like international paper. It has nice numbers. Basic difference between the charts would be great. How to read them. Ryan, awesome. How to read a chart. Simple. Okay? Try not to make more out of it than it needs to be. Okay, Ryan? First and foremost, the very first thing I want to see on a chart. Very first thing, and it takes less than 3 seconds. Okay? As soon as you get used to it, less than 3 seconds, you might even get down to 2 seconds. Okay? Picture is worth 1,000 words. You ready? High, low, where was it? Where is it? See that? Where's the high? Right there. Where's the low? Right there. Where was it a year ago? Right there. Where is it right now? Right there. Takes less than 4 seconds to see that. Once you see that, then you decide how do you read it. It reads from left to right. Okay, so this was a year ago. So what did it do a year ago? It went up, it pulled back, and it made a bottom right here in November. That is the low of the year in November. She went up, pulled back, went up, pulled back, went up, pulled back, and look what happened here. She not only went up, but she gapped up, and then she kept on going. That is the high of the year. Okay, that you cannot hide. Okay, high, low, where was it, where is it? That's the first thing I want to see, and that's the 1 year chart. Okay, now, how do you read it? Well, I'd stop right there, because number one, I don't like buying at the high of the year. Okay, so we're just going to disregard this one and go on to our next one. So let's look at another one. Next one will be Ford. I love Ford. I do, seriously. Ford. First thing I want to do when I'm looking at a chart. High, low, where was it? Where is it? Okay, and that's the 1 year chart. Okay, so the high's here, the low's here. This is where it was, this is where it is. Now, this is an awesome place to be because it's not at the bottom and it's not at the high. It's somewhere in the middle. Somewhere in the middle is a place where the stock has already been. So you're going to a destination you already know. Okay, you're not in the basement digging a hole, and you're not on a ladder reaching for the sky. You're basically someplace you've already been. You think about international paper. Yep, basic difference between chart. We're taking a look at that right now. Also, brief description of what futures are. Okay, Ryan, I don't do futures, so I'm not going to talk about them. Okay. Forward contracts between two parties where they agree to price. Okay, yeah. There's your answer about futures. That was a good answer too. Uh-oh, I'm missing some of these questions. Okay, Simone, you don't use TD Ameritrade anymore because they got bought out by Charles Schwab. What's your work day, sir? I don't have a work day anymore. Okay, hold on a second. Let me get some of these questions I missed. Okay, brief about futures. All right, here we are. I'm caught up again. Okay, we're in week 24. Mikey G, okay, week 24. You already said that one. Corrected me. How much commission does Schwab take on your trades? You know what, Felix? I'm going to be 100% honest with you. I have no idea. I really don't care. Okay? That's like going to a Rolls-Royce dealer and asking what kind of gas mileage the car get. It's a cost of doing business. Okay, Robinhood has very minimal commissions. There are a lot of companies that have minimal commissions. TD Ameritrade, all right, wait a minute, they got bought up by Charles Schwab. So Charles Schwab does have commissions. But I really don't pay attention to them because I know they're part of doing business. And it all washes out at the end. If I'm looking for that safe, predictable, consistent 1% per week, I don't worry about that. So let's continue looking at the charts because somebody asked about charts. Okay, so after I figure out the high, the low, where was it, where is it, okay, how does it look? Well, I'm not at the high, good. I'm not at the low, good. I'm somewhere in the middle, great. Now I want to take a deeper look because I like what I'm seeing. It's very simple, very easy, very basic, the 1 year chart. Okay, so a year ago, this is when I start looking at the numbers. A year ago, we're at 1380. Now we have a triple top. Triple top is great, 1541. 1, 2, 3 times. That basically tells me that we, the people, we are the buyers and the sellers. We have put our foot down. Oh, hell no, this thing ain't worth 74 bucks. If it was worth more than 74 bucks, it would have went up higher than 74. Same thing works at the bottom. Look, there's the bottom right there. Okay, there's the bottom. 1, 2, 3, 4 times in November, October, November. If it was going to go down any further, it would have. Okay, so we, the investors, say, oh, hell no, Ford at $9.68. Hell, give me some. You know what? I will buy Ford all day long at $9.68. Do you know why? Because the book value on Ford is somewhere around 12 or 14 bucks. the book value. That means if Ford liquidated every single thing they own, it's around $14 a share. Would I buy it at $9? Oh, hell yeah. That's what we, the investors, say. $9? Hell yeah, I'm buying some. So what happens? She goes back up again. Okay? So, last 90 days I want to take a look at. Now, why don't I look at the other ones? Well, I don't look at the other ones because they're really not that important to me. Because I want to know what's the high of the year, what's the low of the year, what is the general direction for the year. All right? Now, the last 90 days, that's the last 3 months. The last 3 months, okay, it's kind of far enough back. Like, how did we feel back in April and May, February, March? Okay, this is what we were thinking about Ford 3 months ago. Okay, she went up. Here's our high. Here's our bottom right here. Awesome position right here. Look, you got your high, you got your bottom. What happens next? She goes up. Well, that's what I want to see. But I want to get a little closer because I only want to do it for 5 days. I want to jump in Monday and I want to be out by Friday. Okay, so let's take a look at the last 30 days. Okay, even better. Okay, here's our 30-day high. Here's our 30-day bottom. She's going to the upside. This is where we are now. A little bit more space to go. She'll probably make a new high because look at the space. Look at the spacing. Okay, look at the flow. The flow is you and me. We are the buyers. We are the sellers. We buy Ford when we think it's priced right. We sell Ford when we take our profits and we want to get rid of it. That's all that happens. It goes up, it goes down, it goes up, it goes down. That's all it does. So, Ford, at this moment in time, if I want to buy it tomorrow morning, I pay $12.38. Now, I'm pretty sure if you're on your phone, you can't see that number. That's why this screen is live on YouTube. So sit in front of your big screen TV, grab your popcorn, you know, your cup of wine. Who drinks wine with popcorn? I'm sure there's somebody out there. Somebody's out there sitting on a big couch, comfortable as hell, big bowl of popcorn and a glass of wine. I don't know, I'm kind of curious who it is. Okay, GL, isn't Kohl's on the most shorted list? GL, I honestly don't know. I don't pay attention to that kind of stuff. What I pay attention to is the consistency of dividend increases. Consistency of dividend increases because I want to make sure I'm getting higher and higher money every year. Okay? And then do they have weekly options? Well, Kohl's is on my list. Okay? I actually have some Kohl's this week. All right. A couple more questions. What else we got here? Premier Product Mart Shop. So basically, I buy a covered call for a credit, and when you close, or do you close the position? All right. Well, this is why I like weekly options, because weekly options. Look at 14 June. That's this Friday. 21 June. That's next Friday. 28 June. That's 2 Fridays away. And then it goes every Friday. So every 7 days I can do this. So if I'm looking at the chart, I'm thinking to myself, okay, this thing might give me, if I buy it at 12.38 and I do the 12s, I'll get 40 cents. Look where the 12s is, right here. What is the odds of this thing staying above 12 by Friday? Think about it. It's at 12.38. 12 is way down here. The stock is right here at the moment. What are the odds of it staying above 12 by Friday? Well, 30-day high, 30-day bottom. It's going to the upside. 12 is way down here. There's a high probability. I like odds and probabilities in my favor. So if I buy it tomorrow morning at 12.38, I sell the 12s. No, I wouldn't do that. I do the 12.50s. I don't like the 12.50s. Yeah, I wouldn't do that one. If you take a good look at the numbers, because if I bought it at 12.38 and I sold the 12s, I'm losing 40 cents right off the top. I mean 38 cents right off the top, which means I'm only gaining 2 cents. Yeah, that's a no. The numbers just don't work. Although I like the chart, I like the way it looks. But 12.38, the 12.50 is going for 11. That's not 1%. The 12s, 40 cents, but I'm losing 38. Yeah, that's not 1% either. So Ford would be a no. Sorry. funny vids, most dividend payments will be between 1 and 5% paid per year. 6,000 roughly at 5%. Rad said, I don't even know how you pronounce that. Alright. Now, I'm kind of curious, Rad. At Funny Vids, most dividend payments would be between 1 and 5% paid year. Yeah, okay. That's old school thinking. And he's 100% correct. Old school thinking is most dividends are 1% to 5% yield, he's talking about. Okay, and it's paid yearly. So it's $60,000, that's 5%. Not a whole hell of a lot. Okay? But if you changed your strategy and did weekly options, that would increase dramatically. Okay? So let's find one that's better. So Ford doesn't cut the mustard. How about Oracle? Oracle's on the list. Oh. RCL. Oracle. First thing I want to look at before I go any further is 124.50. The 124.60s, the 125s. Whoa, nice. Yeah, I'm a little iffy about this. Okay, so the numbers work, but this is a little iffy. First thing I want to look at, where's the high? Here's the high. Where's the low? There's the low. Where was it? Over there. Where is it? Right here. Okay, but by looking at the 1 year chart, okay, it looks okay until I get to this section right here. Okay, I want to look deeper into this one because it just doesn't look quite right. Now, as we look a little bit closer into it, hopefully you'll be able to see why that is also. Art Martell, what's your work day, sir? I don't have a work day. When you're retired, you don't work. Sorry. Used to be. Alright. Simone. I use TD Ameritrade. Okay, TD Ameritrade got bought out by Charles Schwab. Okay. The reason I know that because I was in TD Ameritrade. All my stuff got transferred over to Charles Schwab. And then a couple of weeks ago, I don't know, for those guys who were here a couple of weeks ago, we had a bunch of issues because we kept getting booted off because TD Ameritrade was transferring over. Yeah, but they're finally done, so that's good. Simone TOS. Okay, a couple more questions. Here we go. Where do you recommend I go to learn how to read the Yahoo Finance Trade Grid option chain? Well, I'm not quite sure what it is you're looking to read because the option chains are the same no matter where you go. Okay, you have the stock price, which is here, and then underneath the stock price, if you're qualified to do options, which covered calls is the easiest approval to get because it's the safest trading strategy. The option chain are relatively easy because you have the stock price. All right, this is really quick. It's really not that difficult. Okay, this is what you're basically going to see. You have the last traded price, the bid, what you can sell it for, the ask, what you can buy it for, the volume, how many shares traded that day, the open, what it opened at that day, the high and the low, and then the close. That's what you're going to see in the stock trade grid. Okay, but the option chain is going to be a little bit different. Now, for this particular stock, Oracle, it's in $1 increments. 118, 119, 120, 121, 122, so on and so forth. Okay, other stocks are go 50-cent increments. 15, 15.50, 16, 16.50, 17, 17.50, so on and so forth. Other stocks have $5 increments. 5, 10, 15, 20, 25, 30. And then some stocks have $10 increments. They're all different. But they'll be listed right here as the strike price. Okay, and then the expiration date. Okay, so right at the moment we're looking at this Friday, which is 14 June 24. That is this Friday. This little 4 in parentheses, that's how many days until it expires. Okay, at the 4 days, these things are going to be down to 0. Okay, this one down here, 21 June, Okay, 11 days until it expires. 28 June, 18 days till it expires. So on and so forth. It goes all the way to March of 2025. That means next March it goes out to. Yes, see, I did call Al. But Scott, an option change is really not that difficult. Hopefully that answered your question. Colibri. So I will need to move my funds from E-Trade to Thinkorswim to do my trade. You don't have to do anything. I'm just saying I like Thinkorswim. I've been using it for the past 16 or 18 years because it has everything that I want for this particular trading strategy. Now, this particular trading strategy was created for a 9-year-old little girl. When my daughter was 9, back in 08. She wanted to do what Daddy was doing. Daddy was making ungodly amounts of money back then. But she wanted to learn. So teaching a 9-year-old, it had to be simple. It had to be safe. It had to be predictable. The income had to be consistent. And then there was no way that she could lose. That's a very important one. No way she could lose. So, in order for that to happen, I had 5 rules. Number 1, never buy something you don't want to hold long term because you just might have to. Number 2, never sell at a loss. Number 3, make sure the company has 20 years of increased dividends. Number 4, make sure it has monthly options. And then number 5, one of the most important ones, make sure the numbers work. What do I mean by that? What am I buying it for? What am I selling it for? And are the charts telling me it's the right time? That's it. Safe, predictable, consistent 1% per week. Nothing but pre-qualified dividend stocks, and those are companies that consistently increase their dividends. Why? Because when the stock goes down, it's not an if. Never, ever, ever is it an if. It's a when. Because stocks go up, stocks go down. 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 That's all they do. They go up, they go down. Best time to buy it is when it's at a low. Okay? When is it at a low? Well, how can you tell? Well, I like to look at the last 30 days. The last 30 days for Ford. Okay? Take a look. Oh, this is Oracle. Sorry, Oracle. Okay? 30 days ago, right here, when he went up, profit taking dropped, up. What do you think is going to happen now? Profit taken and it's going to drop. No to Oracle this week. Sorry. Randall Ray, I called you at the crabs table. Hey, you know, I don't know where any of you guys are. If you guys going to leave a phone number for me to call, yeah, I'm going to pick up the phone. Now, I'm retired. I get up when I feel like it. Usually when the sun gets up. But I don't have to. Okay? As soon as the sun comes up, even sometimes before the sun comes up. I was raised in the sticks. You know, we woke up when the sun got up. Okay? So you leave your phone number, you just got to deal with the fact that I'm going to call you whenever I call you. I don't have a schedule, so it's not like, can you call me at 3? No, I'll call you whenever I'm damn well ready to call you. Al, yes, Kohl's is on the most shorted list. Okay. Today I put my sell order option with Kohl's. All right, Simone, way to go. Now, Simone, did I actually call you? I don't remember. Ryan, flip the camera, please. All right, Ryan, just for you. You ready? Here you go, Ryan. Do you feel better? Great. Now I'm going to flip it back because I don't like it. Okay, the reason why I don't like it, Ryan, I've got 4 cameras here, 1 camera down here. I like continuity. I like things all be the same. So, if this camera's here at TikTok for your pleasure, it drives me nuts. And I'm not here to be driven nuts. I'm here for my pleasure. You know, I'm here because I enjoy sharing with you guys. So you have to deal with a little bit of an inconvenience. All right? So, this chart here behind me, Ryan, this screen here is live on YouTube. Go to YouTube, pull up this chart right here. This screen right here, .10minutetrader.com. There's 2 lives on YouTube at the moment. One is me standing in front of the screen. The other one is just the screen alone. Okay? Alright, so that being said, Brian, I made 10 grand on Nvidia. Should I sell it now or hold on to it? Okay, Brian, I don't like NVIDIA. I don't. Okay? It's like, it was $1,200. They did a 10-to-1 split. Now they're down to 120. Okay? Did you see what the dividend is? NVDA. Holy cow. Nice. Did you see that? Okay, they did a 10-to-1 split. Okay, a 10-to-1 split. They brought it down to $120. Okay. She opened up today. This is nuts. Okay, here we go. You seeing these numbers? Now, the reason why this is live on YouTube and you can sit in front of your big screen TV, because when I point these numbers out, you're not going to see them on your phone. Okay? Today, 6/10/24, she opened up at 120. She opened up at 120 this morning. The high of the day, 195. You believe that crap? She opens up at 120, she shoots up to 195, and then she closes at 121. It's not a profit until you take it. Okay, why is it important for you that a company has dividends when you are selling calls? Well, Hakuna, what happens when the stock goes down? It's not an if, it's a when. When the stock goes down, what am I going to get? Okay? When the stock goes down, I don't get anything. Alright? Now, let me go to one of these for a second. See if I can explain this in another manner. Alright, let's go here. 1 second. T-E. Okay. Alright, Hakuna, you ready for this? Now, this is for some of you guys. I made 10 grand. Okay, Brian, I'm happy that you made a nice chunk of change today. That's awesome. But let me tell you, it's not a profit until you take it. Now, I showed you the chart where she opened up at 120 today and she went to 195. Did you sell it at 195 when you had the opportunity? Probably not. It's not a profit until you take it. Most people saw that, wait a minute, 195, why didn't I sell it at 195? I don't know. I don't do NVIDIA. The dividend for NVIDIA is 1 cent. 1 cent. Yeah, no. Okay, so, Hakuna, you ready for this? Here's the dividend. Okay? You just can't argue with that. Okay, June 24th, today's the 10th. John Deere paying out its dividend on the 28th of the month, which is at the end of the month. Alright, so if I buy it 2 weeks before the dividend date, and the reason why I buy it 2 weeks before the dividend date is because stocks have a tendency to go up before the dividend is paid. So the dividend is paid here. So I have this week, and this week for the stock to move up 1%. Okay, and if it doesn't move up 1%, if I buy it today, okay, what was the number for the John Deere? Okay, 368 to 367 is going for 390. Wow, nice. 370. Okay, so hypothetically speaking, all right, you ready? Hypothetically speaking, John Deere is right here, the 28th. If I bought it today, okay, on the 28th, it's going to pay out a dividend of $1.47. All right, fine. If I bought it today at 368.30, the 367 is going for 390, the 370 is going for 265. So let's say somewhere around $3. I could bring in $3. If the stock stays above my strike price come Friday, okay, right now it's at 368. If I sold at 367 and a half and picked up $3.90, that's a hell of a lot higher than the dividend, correct? Now, okay, hold on a second. But James, you know that the dividend is a zero-sum game. When the dividend occurs, the stock drops and the price the same amount as the dividend. Hakuna, you're absolutely 100% correct, but you are missing a key factor. Okay? Now, I'm going to continue explaining so you'll be able to see it. Okay, so if I buy it first thing in the morning and I sell somebody the rights to buy it at $367.50, okay, I collect $3.90, which is a hell of a lot higher than the dividend that I could be paying out at the end of the month. Now, the 367 is right about here somewhere. We got a 30-day high here, a 30-day bottom here, a little bit of retracement, pull it back a little bit, now here. So where's it going to go next? Well, by the way the chart looks, it should be going to the upside. Should be. So here's the question, and this is a big question. Big question. Do I like John Deere? Do I want to buy John Deere and hold on to John Deere? Okay, so let's say I do. Now, if I buy it today at the current price, I sell the at the money, whichever I buy it for, I'm going to sell that call strike, which is at this moment, 360, was it 360? 390. Okay, so it's at 390. Okay, so if I buy it here, I sell somebody the rights to buy it from me for the exact same price I paid for it. I'm collecting $3.90 right here per share. Okay? So if it hits my target, I'm out and I collect $3.90 rather than collecting the $1.47. Because $3.90 is a hell of a lot higher than $1.47. Okay, so if I don't hit the target here, I keep that $3.90. Then I do it again here, do the exact same thing. Sell somebody the rights to buy it from me for whatever the number works best and what I paid for it. Okay? I collect another premium. So at $3.90 here, let's say we collect another $3 here, and then we collect another one here. So I get premium, 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 dividend. Yeah, the stock goes down after the dividend's paid. Stock goes down after the dividend's paid, not before. The stocks go up before the dividend. After the dividend, the stocks go down. But I can get three premiums and a possible triple play. Triple play is where you buy the stock, you sell it for more than that, you collect the premium, the dividend, and the price difference, the premium, and the dividend. That's a triple play. Possibility of triple play right here on John Deere. It's all about the numbers. What is the best place for me to put my numbers to get the highest rate of return and the best predictability of consistency? Okay? I'm not looking for big profits. Now, Brian, you made 10 grand on NVIDIA. Good. Happy for you. How often do you do that? Okay? And how often are you consistently up on your account? I consistently do 50% per year. Consistently for over 15 years. Okay? If you take a look at my YouTube channel, okay, come look at the oldest videos that I have available. Okay, videos, go to the oldest. The oldest one I actually have available is I was 12 years old. Okay, remember I told you I created
the list I'm going to send you is going to help you get the best return on your money.
Who can't do what you're doing? What?
That's me 12 years ago, doing the exact same thing. I'm standing in front of a whiteboard because we didn't have back then what we have today. But yeah, I've been doing this for a while. Most traders who get 10 grand on one stock don't do that consistently. And I'm happy for you. I'm good for you. What company did I sell? Oh my goodness, Reef Replicas. That was a long time ago. All right, let's go back where we were. Where were we? Here we go. Okay, great job. I've done 90 minutes. Okay, good. Wonderful. More questions. Here we go. Okay, Ryan, I did flip the camera. Okay. I missed all these. All right, there's that. We're used to it. Yep. 25 per. Steve, I have no idea. Steve, you're talking something free, okay? I have no idea what you're talking about because these questions, they come and go so quickly. 25 per trade. Oh yeah, that's probably Robinhood or one of those free ones. All right. Do you use Ameritrade or what breaker do you use? All right, Simone. Ameritrade is no longer. Ameritrade got bought out by Charles Schwab. Okay? Keep going. Quest, blah, blah, blah. Bob, do you ever roll over the call before expiration if it gets close to your strike price? Absolutely, Bob. All the time. Okay? It's all about the numbers. Wednesday, okay, alright, so we have a morning trading group. Monday, Tuesday, Wednesday, Thursday. We're on at 9 a.m. I think we finished up right around 11 today because people just kept asking questions. And I stay on until the questions are all done because I'm here to help people. Seriously, I am. So, I'll sit there and keep answering questions. But Monday, Tuesday, Wednesday, Thursday. Monday we do a lot of trading because that's the highest rate of return we're going to get for our investments. Okay, we buy it on Monday, we sell the option on Monday. That's the highest rate we're going to get. All right? But from there, Tuesday, Wednesday, Thursday, we check our positions constantly. And it takes less than 5 or 10 minutes to look at our positions. I'll give you a quick example. All right, AEO, here we are. All right, I'm into AEO at 25.97. Okay, BITO, I'm into BITO at 680 and 360. Okay, Coles, I'm into Coles at 25.94. It's at 22.99. Okay, great. Lowe's, same thing. I'll look at the trade. This is where I am. This is what it's doing. This is what the stock's doing. Blah, blah, blah. Takes less than 15 minutes a day. Okay, so depending on what the numbers are, will dictate what we do next. Now, today's Monday. The only thing we figure out is, what did we buy today? I bought Macy's today. That's the only thing I bought. Okay, and I sold a couple of options. Okay, I still have a couple of positions I didn't do anything with today. And I still have $16,000 to invest in this particular account. Now, I do have other accounts. I have to do the same thing then. So, Tuesday, Wednesday, and Thursday, I will look at the account, see what happened Monday, and then I will judge what is the best situation for me today. And it's really not that difficult, because whenever you buy a stock from, that number never changes. What does change is, what is it worth now, and what are the options worth now, because that changes all the time. What doesn't change is what you pay for it. So once you jump in, that's where you are. So if I jump in at John Deere tomorrow morning, 368.30 is where I'm at. Okay, so everything from that moment on will decide, what do I do next? Okay, why does a stock increase in value before a dividend? What's the logic behind it? Well, that's a simple question. Simple answer. People want to collect the dividends. That's basically it. People looking at dividends as free money. So they buy the stock, they collect the dividend, they jump on out. Okay, I don't ask why. I just take advantage of it. Okay, so Bob, I hope that answered your question. New idea for evening watching. Frenchies, how are you doing today? We got popcorn and wine. Oh, way to go for you, dude. Good for you. I don't know. What would I be doing? I don't know. I'd probably be sitting back in my recliner, enjoying it, if that's what I was doing. But I'm here. I'm not a watcher. I'm a doer. It's like my friends will ask me, "Do you like to watch sports?" No. I like to play sports. I don't like to watch. Okay? Give me a ball game. Yeah, I'll play ball. I play soccer. I'm 60 years old and I still play soccer. I probably shouldn't, because 4 weeks ago now, I broke my collarbone. Okay, first time on the field after a year. Okay, a year, because I was up in Boston and they don't play soccer in the winter. Okay, so I'm up in Boston and I come down, very first weekend, pop my collarbone. Pop! People on the other side of the field could hear it. Say, oh, that hurt! Okay, so anyway, let's go to some more of these questions here. IBM. Oh, Reg, I'm sorry. Let's take a look at IBM right now. I told you we'd look at it. IBM. Here we go. IBM. Tra-la-la. All right, first thing I want to look at with IBM is, what can I buy it for? 170.38. 170.38. Okay, so what's the 170 going for? $1.78. I'm losing 38 cents right off the top. So that makes me less than 1%. Sorry, Reg, it's a no. Unless, of course, you don't mind collecting less than 1%. So it'll give you probably 0.75%, 0.75. Now, 0.75 from the week is not that bad. Because what is 0.7? Let's do the math. Okay, Reg, hold the phone. Let's do the math. All right, so 170 is going to give you 178. 178. Now, if I'm buying it at 170.38, I'm losing 38 cents right off the top. So I subtract 38 cents off of that, and I'm walking away with $1.40. Okay, so what's my profit margin? $1.40. I'm paying $1.70. I'm going to divide this by $170. Okay, so, all right, 0.8. All right, 0.82 to be more precise. 0.82. All right, so if I bought IBM at the money, I sold someone 170. I would bring in 178. I lose 38 cents right at the top. So I'd walk away with 0.8, a little bit less than 1%. But here's the thing: if you do that every single week, 0.8 multiplied by 52, because it's 52 weeks in a year, that's still 43% for the year. Who else or where else can you do 43% for the year? Where? Because if you know of a place, I just might think of doing something myself. Osprey, you're from Kingston. Now, you really got to tell me a little bit better about that, because there's a lot of Kingstons. There's Kingston in England, there's a Kingston in Massachusetts, there's a Kingston in Maine, there's a Kingston in New Hampshire, there's a Kingston in Connecticut. You mean weekly options? Exactly right. Old dog. Make sure it has weekly options. You're absolutely right. Because I'm doing this for weekly cash flow. Okay, there's over 300 companies that fit my parameters. Okay? Weekly options, 20 years of dividends. Those two right there. Weekly options, 20 years of dividends, over 300 companies that fit that parameter. All right, you have the patience of a saint, flipping the camera 3 times in the past hour. Well, GL, you know what? Do I like teaching? I love teaching. Because you know what I like teaching? Because I know for a fact there are people out there that actually using this, actually profiting, and actually saying thank you to me. Great. Now there's a lot of turds out there. Okay, I think I had to throw out 7 people one night. One night, 7 people. I had to boot them. 7. That's the most so far. But they say if you don't have enough haters, you're just not working hard enough. So I haven't thrown anybody out in weeks. I gotta find someone else to throw out. I don't think you have had called me, but thank you for all the info. Oh, well, alrighty, Simone. Stingray 369. Welcome to the show, Stingray. It's the first time I've seen you. Uh-oh. Okay. Brian, you're up 33% on all investments. Well, that's awesome. Stingray, 12 years, then is not much difference from now. Well, this is a huge difference from 12 years ago. 12 years ago, it's a totally different world. All right, over here, Hakuna. Why is it better to sell a call at the money rather than in the money? No, I never said that. At the money, you'll get a higher rate of return. In the money, you'll get a safer trade. Okay? So, Brian, here's an interesting question for you. You're up 33% at this moment in time. Now, have you consistently done 33% every single year for the past 15 years? And do you consistently continue? Are you going to consistently do it? And how much time does it take you to do that? Mine's 15 minutes a day. I'm not saying I'm right, and I'm not saying you're wrong. I'm just at the point in my life where I like consistency and predictability. Okay? I'm not out there looking for the new the new stock to go to the roof. I'm not. I like using the same ones over and over and over again because they're consistent. Questions on Instagram. I just read those. Why does stock increase value before the dividend? Well, because people want to capture the dividend. That's about it. Okay? Why is it better to sell a call at the money than in the money? Well, because at the money it's higher price, and that I would prefer, me personally, I would prefer in the money. Now, what does he mean by that? Well, at 170.38 at the moment, at the money is the 170 because I'm buying it for 170.38. The closest one is 170. That's at the money. In the money will be 167, 165, 162.50, 160, 157.50, so on and so forth. Out of the money would be the 172, 172.50 to 175, 177.50, blah, 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 blah. Okay, you get a higher rate of return at the money. In the money, you get a lower rate of return, but you have more predictability and more consistency. Have you given your experience 1%? Seems generous. Well, 1% is not that bad. So at the money is best paid, you said. Not really. Hakuna. Okay, I prefer in the money. Okay, so if I was going to do this trade right here, the 170 would give me 0.8%. What would the 167.50 give me? Well, let's take a look. What would the 167.50 give me? Bring up my calculator, get rid of this. 167.50, and the 167.50 is going for 340 plus 340. Then I want to subtract 170.38 because that's the current price. 170.38, and that gives me a grand total of 52 cents. 52 cents divided by the purchase price, 170, equals 3%. I mean 0.3%. Yeah, not even close. Okay, sometimes the numbers work, sometimes they don't. Now we already know that 170.38, the 170s are paying 0.8. So the further in you go with the money, the less return you're going to get, but the higher predictability and the higher chance of getting called out. Look at that, we're almost done for the night. Hey, G-Nowls, you do realize you got 3 minutes before I'm calling it a day. Better late than never, right? James been doing curls with 100 pounds. Yeah, you're lucky. If I can even do 10 pounds nowadays. And it hurts just to lift my arm up sometimes. And that really just pisses me off. I'm not ready to get old. How do you collect the dividend? Do you on the dividend stay? All right, Stingray. Let's take a look at this one in particular. This is John Deere, DE. DE is John Deere. They're paying on a dividend on the 28th. There's 4 dates to remember when it comes to dividends. One is the dividend announcement date. That's when they announce it. 2 is the EX date. That's the last day the stock trades before the dividend is paid out. 3, the date of record. Wow. Okay, whoever owns the stock on the date of record is entitled to the dividend. And 4, the dividend payment date. So as long as you own the stock on or before the 28th, 27th, 26th, 25th, 18th, 20th, 12th, 6th, 5th, 4th, before the EX date, you are entitled to that dividend. James was nearly drafted by the Miami Dolphins. You know what? I actually met Dan Marino once. Because years ago, when I first moved to Fort Lauderdale, 86, when Dan Marino was playing, somebody gave him 5 acres of land in I think it's Weston. Yep, had a nice house built. But people wouldn't leave him alone. They'd be on the banks with binoculars staring at him. So we went in and we put up all these big, huge trees to give him some privacy. End of the day, he'd come up with a 6-pack of beer. Super nice guy. Stingray. Own it before the EX day, then pays 12% risk because, yeah, you didn't have the Boston access. Okay. 8.2, not bad. All right. Well, Reg, if you like IBM, you know, and you're okay with 0.8%, there's nothing wrong with that at all. Okay. More questions. Don't forget the Kingston, Ontario. Yeah, see, Kingston, Ontario. Yeah, so when you say you're from Kingston, you got to be a little bit more specific of exactly which Kingston that is. All right. What else we got? Don't forget Kingston, Ontario. Okay. All right, GL. I'll try to be on the list for Floridians that buy you a burger and a beer. Oh, GL, be my guest. What? And what has been the maximum drawdown? All right, Doc, you're going to be a little bit more explicit by that, what you mean by that. Okay? 'Cause I don't know what in particular you're talking about, the maximum drawdown. Drawdown for what in particular? Brian, no, it took 3 years. All right, Brian, it took you 3 years to get 33%? Or 30%? All right, Brian, I'm lost with the conversation. Because remember, I'm talking to a bunch of people here. All right, Rocco, James, if you did 50% for 15 years, you'd be incredibly wealthy by now. All right, Rocco, you miss a lot of what I say. When I say I live off of my interest, okay, so let's say hypothetically, okay, so here we go, right here. Okay, account number 1, 117,000, okay? Right, 0.71%, I took out 1,200. 1.24%, I took out 1,200. 2.61% took out 1,000. 1.9 didn't take out anything. 1.9 didn't take anything. 1.2 took out 2,100. Okay, so if you go back up here, okay, I started out at 117. I've taken out almost $23,000 already, living expenses. Okay, I live very comfortably on $1,200 a week. All right, I don't have, big bills. So at 50% a year, I live off of that money. So my account does not increase that much. Okay, so if I'm spending 80 to 90%, now remember, I got 3 kids and an ex-wife, so here you go. So I help my son buy his house, help my other son buy his house. I tell my daughter, wedding or house, one or the other, you can't have both. So yeah, you'd think that, but no. You get to a certain point in your life where money doesn't have that big of a draw anymore. All right, Michael David Robinson. Some kind of tax implications at more than, I think, 2 steps inside the money. 2, isn't there? Mike, I kind of wish I knew exactly what we're talking about at the moment. Some kind of tax implications at more than, I think, 2 steps inside the money. 2, isn't there? I'm not 100% following you, David. Michael David Robertson. You gotta. No, I feel bad because I want to have a. You know what we're doing next quarter? We're actually going to have a phone where we're going to have the moderators. Now we have a couple of the moderators that said that they'd be willing to do this. They're going to field out the questions, and you actually get to be all of this. So I'm putting up an intercom system here that's going to be attached to an old phone. Okay, an old phone, Series 6. Why a Series 6? Because I can plug it in here, okay, into the intercom system. So I can talk just like I'm talking, and all the speakers around would have you amplified so that we can hear you. So in a couple of weeks, when the 3rd quarter comes, which is in the beginning of July, we're going to have a couple of moderators, and there could be a phone number right up here. Said you want to call in, you call in and you ask your questions. It'd be kind of like one of those TV shows. You call in and ask your questions. So that way, Michael David Robinson will be able to have a better understanding of exactly what the question is you're talking about. Because I'm a little bit unclear specifically how to answer that. Because there are tax implications every time you sell something. But when you say, I think 2 steps inside the money, 2 isn't there, I have no idea where it's going from there. Sorry. All right, Stingray. How do you make money on dividends? Is buy and hold or something else traditionally? I don't do anything traditionally. Seriously, I don't. I am so far off the grid. It's totally different. All right, so you can either listen to the talking heads on TV, and they'll tell you how to live your life the way they want you to, okay? Or you can go outside the lines, okay? I buy specifically for weekly cash flow. Now, I never even knew it existed, okay? I grew up listening to the talking heads on TV. Get a job, work 30, 40 years of your life, put X amount away, retire comfortably. Yeah, didn't work for me very well. Until I started my own company. And then they kept throwing money at me to a point like, what the hell am I supposed to do with all this? So I had to figure out ways to do it. And then I read a book by Wade Cook, The Wall Street Money Machine. And then he said stuff in there. I said, that can't be right. But I took the time and the effort to actually do the research. And he was right. So that got me to thinking, if he's right about this, maybe some of these outlandish guys are also correct. And then I just started listening to more and more people, and it's like, holy cow. So when my daughter at 9 years old, back in '08, said that she wanted to be able to trade too, well, it had to be simple. It had to be safe, predictable, consistent, and no way she could lose. So it took me a while to figure out, how can I do that? All right, so I looked and I said, wait, is that right? You take a look at the dividends. How did the dividend affect the stock? Because I tried the earnings. Hold on a second. Let's go here. Let's show you one thing for a second. Okay. Okay. Earnings. Lennar, Kroger, GIS, General Mills, and Walgreens. Okay? You take a look at the earnings. I've seen positive earnings where stocks go down. I've seen negative earnings where stock goes up. So I couldn't use the earnings. Right? Stock splits. Oh, there's nothing. Economic event, nothing. Conference calls. Okay, so there's conference calls. What happens on a daily or weekly basis that can give you a good indicator to tell you when a stock is going to move? So I started looking at dividends. Now, more precisely, hold on a second, I'm going to show you this. More precisely, we're going to look at the data chain, the data stream. Now, what do I mean by the data stream? We're going to get to it in a second. Why isn't it pulling up Microsoft? Microsoft is everybody knows who Microsoft is. Why isn't it pulling it up? Quote lookup MSFT. Come on. Okay, so we're going to look at Microsoft for a second. Now, I want to look at historical data because I want to show you what I found out. Okay, historical prices. Okay, here's historical prices. You see them? Okay, for those of you who don't know, this chart is available live online. Okay, live on YouTube. Okay, so dividend. Here it is right here, 75 cents. Let's go 10 days before the EX date. Okay, 2, 4, 6, 8, 10. Okay, now, for those of you who don't know, this is called the data stream. Okay, you have the date. The first column is the date. May 16th, May 15th, May 14th, May 13th, May 9th, May 8th, so on, blah, blah, blah. The first column is the opening price of the day. The second column is the high price of the day. The third column is the low price of the day, and then the close, the adjusted, and the volume. Okay? You will see an entry for every single trading day all the way back to the very first day Microsoft came available. Okay, so what am I looking at? I'm looking at the dividend right here. 10 days before the EX date. This is why I like to go 2 weeks before the date. Okay, 10 days before the EX date. The opening price, 402.28. Okay, if I jump in at 402.28, I'm only looking to make 1%. Well, what is 1% of a $400 stock? Well, it's $4. That's not what I'm looking for. I'm looking for the option price. I'm going to buy it at the money, 402, sell somebody the right to buy it from me at 402, collect the premium, okay, then jump out before the dividend is paid. Well, let's see what happens. Okay, 402 is the entry price. Look at 407, 413, 414, 415, 418, 423. All before the dividend is paid. Now, you can keep going as much as you want and do it over and over again. This is the way I had to do it first. Okay, find out the dividend, 10 days, 2, 4, 6, 8, 10. 401.83 is the opening price. Okay, 412, 414, 415, 420. Okay, it went up. Doesn't have to go up a whole lot. If I'm buying it at the market price, 10 days before the EX date, here's the EX date, right there, the 14th. 10 days, here's the first. 401, there's the price. This is the data stream. Those numbers don't lie. So if I'm buying it at the opening, 10 days before the EX date, I'm selling someone the right to buy it from me for the exact same price I paid for it, collecting my 1%, and when the stock goes up, I get on out with my 1%. Thank you very much. I'll see you again in 90 days. Look at February 14th, 90 days later. Oh, there it is again, May 15th. Okay, I used to have to do it manually. 10 days before the EX date, what is the consistency of increasing? Okay, we're past 11:30, so I'm done for the day. You guys have a great day. We'll catch you again tomorrow. Let me finish up these questions first before I'll call it out a day. Okay, so your residence. I thought you said a couple of weeks ago that you do mostly at the money. Maybe I misunderstood. It all depends on the numbers. Okay, Acuna. It all depends on what the numbers look like. Hey, Rocco, I believe he has been living off his gains. Yeah. Oops, I missed a lot of questions. Okay, so Secretary, Stingray, nice. That's how we make money as well by announcing the dividend date. Okay. Rocco, Jerry, put 100,000 calculated times 1.5, then press equals the number of years. Okay, I'm not quite sure. Stingray, my first time watching you, I really enjoyed it. Well, come back again. We're here to teach. You're here to learn. Okay, I'm going to call Schwab to verify that. Verify, of course. All right, Michael David Robinson, I'm not 100% sure what we're talking about because I'm missing a huge part of the conversation. Because you're thinking something, and I'm trying to jump from one conversation to the next, and I'm lost at what you're talking about here. Thank you for sharing your knowledge. Have a good night. Okay, Brian. For gain on option is taxes. Oh, foreign on option is tax. All right, Damon, Damoud, 24. No idea what you're talking about. Short gain. Okay. That is a great way to make money without much risk. True. I can't wait to call in and argue with James over puts. I don't do puts, Rocco. Plain and simple. What are the risks of making dividends? Stingray, I'm not 100% sure how to answer that question because I don't know what it is you're looking for. What I'm looking for is a company that pays dividends and consistently increases. That's where dividend comes in. Worst case scenario, I'll take the dividend. I would prefer not. I would prefer to jump in, collect the premium, and be out by Friday. That's what I prefer. Sometimes I have to go into the dividend date and collect the dividend. I prefer not to, though. Next, 2 steps was adding or helping possibly with someone who is asking about covered calls deeper in the money. Okay. I think You're doing a good job already. Thanks, Damon. Wayne Cook. That's correct. Wade Cook. Sorry, Wade Cook. Yeah, that was a good book. Wade Cook. Awesome. Okay. Good night, Reg. Okay, GL. Yeah, 52 weeks out of the year. If you're making 1% minimum a week, that's 67% gains annually. Yep, you're correct. I've opened your eyes. Well, the same way I felt when that happened. Yep, The Wall Street Money Machine. That was the name of the book. Stingray. Whoops, I missed that question. Uh-oh. Good night. Agree, leave it. Stingray. You have to buy a lot to make a good amount of dividends from Microsoft. Well, you know, it all works itself out. You know, Microsoft is over $300. I usually don't do it. Now, Microsoft used to be in the 50s, 60s, 70s, 80s, but now she went up. So it is what it is. Is that called a covered call? Yes, it is. By the way, your screen was all white. Well, the screen is live on YouTube. So if you're looking at it on your phone or your tablet, it is going to look all white. But if you're looking at it on YouTube on your phone or your computer, then you'll see the numbers. Or do you let the dividend take your call option in the money after you bought it in the money? All right, your residents, I'm not 100% sure what we're talking about. So after money is the best, rest paid, you said. Okay, it's always different. After money will take you, IB, the money, thanks for the dividend. Yep, something like that. Rocco. Pays a dividend consistently, or is on Warren Buffett's list, or is a stock of James Specialist. Basically, yeah. Alright, all other suggestions get scolded. Yeah, basically, what the hell were you thinking? Yeah. I follow you on YouTube too. Alright, Stingray, that's cool. But Rocco, you're right. You know, it's a simple strategy. You know, it's safe, predictable, consistent, 1% per week. That's all I'm looking for. Okay, I'd like to have 20 years or more of increased dividends and weekly options. That way I can be safe and reassured that my consistency is going to be there. Alright? So, yeah, and then when somebody throws something that crap, in my opinion, crap. Now I'll call it as I see it. You know, I come from the era where, you know, we call it like we see it. You know? Alright, anyway, all that being said, you guys have a great day, and we'll see you again tomorrow. That one's done. This one's done. Get rid of all these phones. Stingray, 9 o'clock every night. Cheers, guys. Done. Okay, you're finished, done. Okay, so you guys here to the left, this is James from Dividend Stock Talk signing out for the night. Catch you guys again tomorrow night. Same bat time, same bat channel. It is 6:10:24, officially 10 minutes to midnight. Wow, that was a long session tonight. Have a great day. We'll see you again tomorrow.